All right, wonderful. Perfect. I'll just let everybody else in, whoever is waiting, and then we'll get started. Until then, I would just request you all to introduce yourself. This is going to be a power packed webinar, one of the most powerful webinars that you've ever attended. And we will learn institutional trading from the absolute scratch. I'm going to help you understand what exactly liquidity, order flow trading, smart money concepts is all about. And we are going to be learning about two strategies in the webinar today from the scratch. So you don't need to worry if you have no experience with trading or with institutional trading specifically. All right, I hope you're good. Okay, my name is Ravi. I'm CA from Dehradun. Welcome, Mr. Ravi Chandrasekhar from Andhra Pradesh. I'm an engineer. Dhruv, student, Bangalore. Okay, Megha from Kerala. Arun from Chennai. Anudeep from Hyderabad. Himanshu from Pune. Okay, welcome. Pradeep Jadhav from Mumbai. Nikitesh Nandale from Nashik, Ashish from Kishangarh, welcome. Murali from, Murali is a teacher, welcome, sir. Teddy De Cruz from Mumbai, Arvind from Tamil Nadu, Mohan, Vikash, Karthik, Rohit, Amal, Nixon, we've got Jairaj, we've got someone from Dubai, Abu Dhabi, Udupi, we've got someone from Abhijit from Nashik, doctor by profession, welcome. Ruksar, Sriharan, and now there are so many messages, I can't read all of them. If at all there's any problem with the voice, you can just follow the on-screen instructions. Click on join with audio, click on the mic button, you will be able to hear me. All right. Now, I hope everyone's audio video thing is pretty sorted. All right, perfect. All right. Okay, so just let me do a final check before we get started. All right, everything is good from my end. We're good to go. All right, perfect. So let's begin the institutional trading strategies webinar. A lot of people have been waiting for this webinar, and we are super excited to help all of you in getting your journey started with institutional trading in a very simple, easy, and a very realistic way. So let's get going. So I'll just quickly introduce myself. So I'm Parang. I'm the chairman of the StockWiz group. I have over 10 years of trading experience in the markets. I've traded Indian markets, American markets, European markets, Forex and commodities. But my core specialization is in the Indian markets. And I have focused a lot on institutional trading in the last 4 years. So in my last 10 years of trading experience, I basically learned a lot of things. So one was in my first initial 4 or 5 years, I was making a lot of losses, just like a lot of you guys. Okay, so let me just ask everyone this, right? How many of you faced a lot of losses with index options trading, right? So I know investors, but I'm talking specifically about the trading side of things. How many of you have faced a lot of losses with respect to Nifty, Bank Nifty, Fin Nifty, or whatever kind of options trading? So I know that's the story. I started my trading just like you, watching a couple of YouTube videos. Open is equal to lows, I was buying. Open is equal to highs, I was selling. MACD crossing overs, I was buying. RSI above 60s, I was buying. Trend line breaks, I was selling. How many of you have done all of that? Bull flag pattern, pennant pattern, ascending triangle coming in. I was like, oh my God, there's a breakout going to be coming in. And then after losing money for like four straight years, and I'll be very honest, for the first 4 years, I started when I was 18 years old. First 4 years, I was just consecutively losing money. And then I went to America. I went to Wall Street. I went to a firm called SMB Capital. You can Google about it later. This is one of the largest prop trading firms in the world, having over $50 million plus of capital that they manage. So this is where my journey changed, and I got introduced to order flow institutional style of trading. I learned all of this. I realized my mistakes, and then I figured out that you can't just cut, copy, paste whatever you have learned in America and apply it in India, because by the time I started applying that in India, Indian markets changed completely. So one more thing I want to just give a natural consensus. How many of you believe Indian markets have changed completely post COVID? So for those of you who have been trading in the markets, if you were trading pre-COVID, pre-2020, the market was very different. Post-COVID, the market is completely different, right? So now the market is much more clustered, or I would say very crowded with algos. It's crowded with a lot of institutions. A lot of retail traders have entered. So a lot of things have changed, but one thing doesn't change, and that is order flow continues to work. And in this webinar, we're going to be focusing primarily on that. So as I was introducing myself, I specialize in Indian markets trading, and I have done my entire finance, my entire educational background has been in the field of finance. I've done my BB honors, my master's in finance. I am a chartered financial analyst level 3 candidate. If you don't know what CFA is, it's like the gold standard of investment banking. I'm also a financial modeling and valuation analyst. I am a National Institute of Securities Market, NISM, certified research analyst. I am also a SEBI registered research analyst. So basically, long story short, all my life, I have studied about trading and invest. I've done trading and investing, and these last 5 or 6 years, where I got introduced to smart money concepts, institutional trading, that has been like a game changer for me. And in this webinar, I am going to showcase every single thing that I know about institutional trading, how it has been working for me, the good, the bad, and the ugly, for and what should be your expectations from this. Now, whenever you're learning anything in the market, right, you need to understand who you are learning from, what are some metrics of the strategy, what is the verified PNL, how has the strategy been working in the current market, 3 months, 6 months, 9 months, 1 year back, maybe 2 years back. How many of you agree, right? Anyone can claim to be a guru, come here, make a video, and just give yarn, right, out of nowhere, right? After the markets are done, anyone can come and say anything. How many of you agree to this, right? Once the markets are done and dusted, right, everyone can become a guru. Everyone can just guide, okay, you should have done this, you should have done that. I don't really believe in that. So hence, before starting the webinar, I will first let you go through my verified PNL so that you know what should your expectations be. This is a highly professional webinar, meaning that every single thing that I will tell you will be backed by logic with a process, right? So no matter what problems you had in the past, I am here to give you solutions to all, at least to my best capacity. And I will try to be as transparent, honest, and straightforward in everything that I tell. So now, before we get kind of started, I'll just quickly hover over my verified PNL, and I will show you and break everything down in like a lot of detail. And I am going to tell you one thing for sure: this is not the webinar which is going to tell you that you can double your money every month. This is not the webinar where I'm going to come and tell you that you can make 100% return every month, or etc etc. This is not a webinar where I'm going to come and tell you there is a strategy that will give you 95% win rate, jackpot strategy. I hope all of you are above this, all of this stupidity. How many of you are with me? Can I have a yes? I hope all of you are mature enough that you are above all of this stupidity, that all of this doesn't really exist. You can't really control any outcome of the stock markets. All you can control is your strategy, your system, your process, right? And obviously your risk management. So now, whenever we are learning a strategy, there are few important metrics that you need to understand. And those are very, very simple. Number one is win rate or accuracy of the strategy. Now, I hope a lot of you have probably heard about these terms in the past, but accuracy or win rate is that metric of a trading system which determines how much percentage is your success rate. So for a minimum of 100 trades executed, if your strategy is giving you 75 profitable trades, can I say the strategy has a 75% accuracy or a 75% win rate? Can I say that? Is everyone with me? Right? Now, important thing is a minimum of 100 trades. And I'll tell you why. If you've studied statistics in your childhood, how many of you have done this, right? Now, you might feel that, how did statistics come into play? But I'll tell you, this business that you are getting in, the business of stock markets, it's all about understanding the outcomes and probabilities. How many of you believe so? Like, if you understand this from a very professional angle, you can't really control how Nifty will open tomorrow. You can't control what Reliance will announce tomorrow. You can't control if Iran and Israel will have a new leg of friendship day after, right? And you can't even control what crude oil prices will do tomorrow. So there are very little outcomes that we can control. All we can is the system through which we trade. So this strategy, the two set of strategies that I'm going to be teaching you today, will have a win rate ranging from 65 to 85%. So let me be very honest and very straightforward. 65% to 85% will be the range in which you will operate. Sometimes it will even give you 90%. But as I said, sometimes is not an average, right? So there will be instances in my PNL that I'll show you that I almost had a 100% win rate, almost had a 90% win rate. But does it mean it's going to happen every month, every week? No. So 65 to 85% is the range in which the win rate will operate. Primarily, it will be around 70-75%, but sometimes it can dip to 65, sometimes it can spike to 85%. Now, why does that happen? I hope all of you will agree with me. Market conditions are not the same 365 days a year. How many of you are with me? Market conditions are not the same every single day, every single week, every single month. Some months you'll have the budget, you'll have elections. Some months you'll have a war. Some months you'll have maybe some GDP data coming in. Some months the market is just infused with a lot of money, lots of factors going on. So 70% of the times we're going to make money. The other 30% of the times you have to accept that the market will take money away from you. A lot of traders have this problem. They have no acceptance to losses. How many of you have faced that problem? So again, I'm just telling you, right? Don't expect this webinar to be something where you're going to make money every single day. No, it doesn't work out, right? So I'm going to show you my PNL. Look at my numbers. If you like my numbers, if you understand how I do it professionally, I can help you. So number one is 70% is the average win rate that we are looking at. Sometimes it may even go to 80-85%. But as I said, I'm a professional. I will not try to I will not try to take the best numbers and then tell you this is what you will achieve, right? Now, the next thing is the second thing that I'm going to talk about. The second parameter is the reward to risk ratio. Now, how many of you are aware of risk reward ratio, reward to risk ratio? Like very, very common metric. So essentially, if you are risking 1,000 rupees and you have a winning trade, and if you make 3,000, your reward to risk ratio is 3:1, right? Meaning how much ever money I'm risking, if I'm making 3 times of it, 2 times of it, my reward to risk ratio is 2:1 or 3:1. Now, some simple rules of the strategy that I'll tell you first, and then I will tell you what is the account size that I trade with, what is my percentage ROI expectations every month, and how does it work, right? So I trade with a 30 lakh rupee capital. I repeat, I trade with a 30 lakh rupee capital, and I aim to make 12 to 15% per month return. That is my objective. I may make 20, I may make 6%. That return is not in my control because the market will give me opportunities. And if there are a lot of opportunities and the market is hot, I'm going to make 20. And I will show you months where I've made 20. I will show you months where I've made only 3%. Is that clear with all of you? I want this to be very straightforward, right? I don't want to give you any kind of, false expectations. That is what I do. And that is what I can help you achieve, right? So number one, is 30 lakh rupee capital is what I've used. I aim to make 12 to 15% a month. If some of you are thinking this is low return, by any means, this is very, very high standards of returns. If you compound this for about 8 or 12 months for the year, you're sitting at about 150 to 100% ROI on your capital, which is phenomenal. And I'm really satisfied with that, right? The problem with a lot of people is when people start to make a lot of money very quickly, that is where all the problems come in, and that's why people get into Nifty, Bank Nifty, options, etc. Even I do I do options trading, but that's only 5% of all the trades that you see here. Now the next thing is, since it's a 30 lakh rupee capital, now I'll tell you my risk management rule, which you have to follow, and you can't compromise on that. Because and I'll ask you one more question before I start with the strategy, right? How many of you feel that you already know a lot of strategies, you know a lot of gyan about the markets, but it is not translating into results? Let's be very honest. Let's be very straightforward. A lot of us know a lot of strategies, a lot of videos, a lot of courses, a lot of workshops, a lot of books, right? But it is not translating into results. Some of you might be very new, but I'm talking about people who've already been in the markets, right? So there is no problem of, knowledge, etc., right? The problem is we are into the wrong segment, we are trading the wrong way, and we have never got into the depth of how things actually work. So now when you look at my current PNL, all of these trades are taken up from the two strategies. Number one is the squeeze strategy. Sorry, number one is the order block strategy or the origin strategy. Number two is the squeeze strategy. I'm going to teach both of them to you. Now let's have a look at the numbers, and I'll just quickly run through in the next 2 to 3 minutes. The only reason I'm running through numbers, and I will show you my executions, is so that you understand what realistic trading is all about, right? Because in the world of Instagram, Telegram, Twitter, and YouTube, I think traders, especially the new ones, only see the falsified, glorified style of side of trading. You need to know the realistic stuff, right? So this is the month of August and September. First I'll show that to you, then I'll also go into October, which is only like 3 days, and then I'll go start from January, right? So over here you can clearly see it's pretty simple. Yes, the video is being shared. You can just swipe left or right if you're not able to watch the screen, or alternatively you can just exit and enter the meeting again. I think it should help. All right, so all of that, you can do that. Just give me a minute, I'll just spotlight. Okay, that's done. Now you can look at this, right? So what's the win rate that you can see on the screen, right? It's almost 70%, right? 70% is the win rate that you're able to see around this particular period. And you will just observe one thing. So these are the days, a 21,000 loss, 8,000, whatever loss, but you will always constantly see that the winners are much, much larger than the losers. Can I have a yes, please, if you affirm what I'm trying to say, right? So all what you'll see is that the size of the winners are larger. A lot of days there are no trades taken, and the losers or the losses are very contained and very small, right? So that's one very important thing, right? And that is the one thing that actually made me money, right? Made me money in this. Number two, when you are efficiently trading, your charges plus your brokerage will never be more than 10% of your overall PNL. I repeat, this is done, and this is not a discount broker. This is not like a free broker or something like that, right? They have very good quality executions, and they charge exactly like Zerodha, right? The only thing is their executions are faster. Now, how many of you face this problem that if you make 1 lakh rupees, 30,000 are charges? Let's be very honest, this is 82% of all traders, right? We are also national stock exchange registered, so we know what people go through. We have the numbers. How many of you have this problem? You make 1 lakh rupees in the market, 30,000 are charges. Your loss, the broker is showing 5,000 rupee loss, but with charges the loss is 10,000. Does this happen? Yes or no? I hope I can see a lot of yeses, and I can see a lot of hands raised, right? So I'll just tell you the golden formula, that if you are efficiently trading, your overall PNL ka 10% should be your charges and brokerage. How many of you feel it's fair enough? Like if you're making 100 rupees, 90 should go in your pocket. 10 is for broker, government, blah, 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 blah. For a 10 lakh rupee PNL, is the brokerage very low? For a 9 lakh rupee PNL, is the brokerage literally peanuts? Because the number of trades executed are quality and very, very low number of trades. So this is also some efficiency that you have to kind of get in, right? Now I'll move on from January onwards, and I'll tell you how has things been, and what what I would like to showcase. Now before that, I'll also move over to October 1st, right? Because this is the first few days of October, and I will transparently show you that for the last 2 or 3 days the markets have been a little wild, and there were a few trades that I were in, and I had to face stop losses on October 1st and October 3, right? The reason I'm telling this to you is, in the first week of October, how many of you have seen last 4 days? What has Nifty been doing? What is the market doing? Can I have it on the chat box, right? Last 4 days, what has been the market doing? The market's down like 6-7%. So don't you think it is just normal to have these numbers? Yes or no? Because I'm not saying, just go short the market, but what I'm trying to say is I was long and the markets fell. So I had to take these small losses. And I know my one day of winners, my one winning day will basically take care of everything, right? I'm just trying to be transparent. Why to book losses? See, I'm a professional trader, right? If I have a stop loss being triggered, I will take it, right? I am, people, the people who don't take losses are people who are not confident that they can make it back again, right? So again, I'm just trying to be very honest with you that this is the realistic expectation, that you will have winning days, you will make a lot of money, but be prepared to give something back also to the market, right? So now I'll just go to January, and I'll just start quarter by quarter, and I'll just give you some run through of the data so that you are more confident with the strategy and you're more confident with the numbers, right? So now again, you can see the numbers over here. You almost have like a 80% win rate in this entire scenario. This is a day where I faced 4 stop losses back to back on the same day. And this is a day when Iran-Israel war just started off. So again, it was similar situation to what you saw in the October PNL. I had 5 or 6 long positions, 4 of them hit stop loss, and it's very natural and it's very normal for me to have this, right? And if you will see the other numbers, again, you'll see most of them are like winners. If you also see one very, very interesting data, right? So I'll show you a drawdown period, and I'll show you like a win streak period, right? Risk per trade is not equal, risk per day is equal, Arun, right? So I'll show you the risk management system also, meaning that I told you you can't risk more than 1% of your capital in a trade. And the general trade risk per capital, like the general trade risk will be 0.5% of your entire capital. Now don't think that you are risking 0.5% of the price or anything. It is a very simple position sizing system, that if you have 1 lakh rupees of capital, you cannot lose more than 500 rupees in a single trade. Is it clear to all of you? This is very important, because I know majority of traders who lose money, including me in the starting. I threw risk management in the dustbin. How many of you have done that? Can I have a honest acceptance? 92+% of you think risk management is a joke. We'll learn it later. And you just procrastinate, right? So again, I'm reiterating, without risk management, the system will not make you money, right? So now over here also, if you look at this, the win rate has dropped to 60%, but we are still making money, because our losing trades, if I add all of them up, my one day takes care of everything, right? That is how you make money. So again, what I'm trying to reiterate is, you're not going to make money every single day. You're going to make money on specific days. But when you make money, you're just going to make a lot of money, right? Risk management is important, even if you are doing it for whatever amount of capital, right? Why is stop loss necessary? Okay, so I don't really want to answer this. You have to if you are a realistic trader, you have to understand, right, that the only thing. So there are some people who are asking, why is stop loss necessary? Why are you taking losses? I'll tell you one thing, right? I'll just ask you three questions and then give me your answer, and then I'll start the strategy. Do you do you have any control on what Nirmala Sitharaman will come and tell tomorrow? Give me a yes or a no answer for all of these 5, 6 people who are asking. Right? Do you have any control on what Nirmala Sitharaman will come tomorrow and say GST is off? There is no GST in India tomorrow. You have no control over that, right? What if Mukesh Ambani comes tomorrow and say, I'm retiring, right? I'm leaving the company, I'm selling it off. Do you have any control? No. Do you have any control whether Joe Biden will win or whether Donald Trump will win? No, right? So the markets will move based on these factors. Do you agree? Forget about technicals. Forget about technicals. Forget about demand supply. The market is actually going to move because of these reasons, right? What if BJP loses in, let's say, Haryana, or let's say Haryana, or there are 2, 3 general elections coming in, and then let's say Congress wins all of them, right? So the point is, you have no control on what the market is going to do. The only thing in control in your business is the risk that you take per trade. How many of you agree? The only thing in your control is the risk that you take on a per trade basis. The outcome is not in your control. Boss, if the outcome was in my control, I would have been richer than Mukesh Ambani. It's that simple. If I knew the next trade that I'm going to take is a winner, I will sell my house, I will sell my car, I will sell everything, and I'll put all that money in. How many of you agree? Right? So it's very kiddish to think why to do risk management, right? Risk management is just the only way you survive in the market, right? Now, I'll just quickly run over to the data of May, June. So you will see again the data for April. You'll see this is a drawdown period. So I'll just show you very honestly. I had a drawdown over here where you can see for whatever the last number of whatever trades that I took, I actually, the win rate dropped to about 50%, but I was still break even in this period. The reason I am telling this to you is you have to understand the strategy will also have a consolidation period where if the markets are choppy, the strategy may give you flattish returns. But when it does give you returns, so if over here you can just see, you can just add up all these losses, right? If you add up all of these losses, this one win day takes care of everything. How many of you agree? Can I have a yes or a no affirmation? If I add all of these losses, right? This one day takes care of everything else, and this and this are my take home for that month, right? Now if I scroll up, when the strategy actually gives you money, this is the result that you get. So my point is, I will have no control on when the strategy will make me money. My only objective is to follow the rules. I hope you understand that. Now some people are saying June दिखाओ ये सब तो ठीक है, June दिखाओ. अरे भाई दिखा देता हूँ. Okay, so June is the month where you had elections. This is the month of June, right? So now you will again see the month of June. The numbers are again very constant. Around 10% of my overall P&L goes into charges and brokerage, and all that entire area comes in. All this, this is the election day. So again, my point to all of you is you have to be systematic in whatever you execute. And one more thing for all of those who are thinking, how are we going to learn how trades are executed? I will tell you every single trade that I will show you with the strategy. I will tell you one thing, that whatever trades that I have taken with this verified PNL, I will show you the exact execution price. I will show you what I am planning, and I will show you how I have executed that. What's my plan? How do I close the trade? So all of those things will be shared with you with the exact live timestamp on how am I taking the trade? What's the price at that point of time? What am I doing? How am I trailing stop losses? So all of that. Now, someone is saying you seem to have a bullish bias. Now, please tell me, what are the markets doing for the last 3 years? Can you tell me what are the markets doing for the last 3 years? They've been bullish, right? And there is no reason to be bearish, right? So I personally feel, unless so as I said, I'm a systematic trader. Unless and until my system tells me the market is bearish, I'm not gonna turn around and do all of that stuff, right? So now let's understand. So I'll take all the questions, I'll take all the questions, right? See, again, as a trader, you have to follow the trend. Like, I'm a trend following trader. I know the overall markets are going up, so I know if I look to go short on the market, I will only get probably 10, 12 opportunities. But if I have a full plethora of bullish side of trades, I'm going to go and execute them. Now, all of those trades were a mix of futures. There were a mix of equity trading. Primarily, I focus largely on swing trading. I do not encourage or focus a lot on intraday trading or options trading. And I'll tell you the reason why, right? So, a lot of you are asking, right, how are you able to generate 12, 15% without really trading a lot of options? Now, I'll tell you one thing, right? Everyone wants to learn options trading. Everyone wants to trade options. The strategy that I'm telling you will work in options beautifully. The problem is, if you are not well capitalized, you will always lose money in options. It's that simple. I'm not saying you can't make money in options. A lot of my trades were options also. But what I'm trying to say is, you will not be able to make money in options if you are not well capitalized. Well capitalized meaning, if you don't have capital of 5 lakh rupees, don't get into futures and options. And your PNL. If you have been a trader, you know what I'm talking about. Can I have a yes? I am not here to tell you what all YouTubers are already telling you, right? I'm here to give you the maximum percentage where you can make 10, 12%. I'm going to tell you something which is easier, less complicated, makes the same amount of returns with less stress. Why don't you want to do that? Brokers want you to trade FNO because they make brokerage out of it. YouTubers want you to trade FNO. Everyone wants you to trade futures and options. But SEBI told you 93% of you are losing money. So why are we not understanding that? How many of you feel that there is some logic to it? 93% of us are losing money in FNO every single day. This number is just going to increase. And from November onwards, FNO margins are doubled or maybe tripled. So all of this retail frenzy in options will go away. So what I'm telling you is, just give me the next 90 minutes. If I don't transform the way you trade, you can do whatever. Like, you tell me, you ask me a question, you ask me to stay for the next 5 hours. I'm going to do that. I'm going to ask every single thing out of you. Now, let's get to the strategy. Let's get to the point. So now you all are probably coming are you probably most of you are coming from the retail trading world. This is how a new trader or a beginner trader, amateur trader, starts their journey. You come across support, resistance, chart patterns, indicators, breakouts, trend lines, etc., etc., right? So all of these things used to work in the past. They were the foundation or building block of maybe technical analysis, as people would say. But there is a big problem. The problem is, right now, all of these techniques are ineffective because the market is flooded with algorithm. Now, that's one. Number two, the problem with retail trading is we always wait for volume and candle confirmation to enter. How many of you would agree with this? The problem with retail trading is it lets you enter when the party is over. It will allow you to buy when all the buying is done. It will ask you to probably sell when all the selling is done. It will again ask you to buy when everything is done. It will probably ask you to sell when all the party is over. So my problem with retail techniques is that they are allowing me to enter into a trade when there is nothing left for me. Rather, I want to be a part of a trade before the candle even gets manufactured on the chart. before the volume kicks into the markets and before the breakout really arrives. I want to do it with a 70% accuracy. That's my business. How many of you are with me? I don't want to be right all the time. I don't want to do what everyone else is doing. I have a simple objective. I want to enter before the move happens. That's it. And if I am right 70% of the times, I will beat the market. I will make 10, 12% compounded for 4 years. I will make my capital 20, 25x. I believe in compounding. So there are two major tools that we will use. Number one, order flow. Number two, liquidity. Without any paid software, without any indicator, without any blah, blah, blue. Okay. Without any of that nonsense, we are purely going to focus on three data points. And these three data points do not change for anyone in the world: price, time, and volume. So let me introduce institutional trading to you. And we will do all of this with three parameters: price, time, and volume. So now some people are asking why price, time, and volume. So I'll just tell you one thing, right? Market data that you receive from any software or any data provider. Now, we are National Stock Exchange official data vendors. So we pay 70 lakhs plus for the real data that we get, and we can't distribute it to anyone else. So we know what data is real data, and whatever data your broker gives you, whatever data someone who's taking 500 rupees from you, 1,000 rupees from you, 2,000 rupees from you, then they're giving you literally bullshit. They're not giving you anything. So what I'm trying to tell you is, if you try to compete with institutions based on data or technology, will you lose or will you win? If you try to compete with institutions on money, technology, and data, are you going to ever win? You will by default lose. You are not even in the race, right? So why to create a system which is built on systematic things which we are having no control of? And number two, even if I give you all the data in the world and 25,000 orders start coming in front of your screen every minute, will you even be able to analyze them? Some people think order flow trading means lots of orders coming on the screen, and then we will know, oh, wow, institutions have entered. Boss, I'll tell you one thing. If 25, 30,000 orders are punching in your screen every 30 seconds, no, you will have no idea what's happening. How many of you agree? So even if you get the data, you need to have technology which deciphers that who is entering, who's not. So again, I don't want to complicate all of that, right? I've done all of this in my life. First 4 years, I thought the more complicated my chart looks, the more concepts I apply, the more technical I can make my trading journey, the more powerful trader I will be. And in these last 10 years, I've understood the simple your trading system is, the easier is your decision making, the calmer you are, and the better your results will be. So all these institutional trading models, they will be super simple, super straightforward to learn. You just need to be a disciplined, systematic trader. And order flow and liquidity will be the two tools that we are going to be using, right? Now, why price, why time, why volume? You tell me, at 9:17 a.m. tomorrow in the morning, the price of Reliance, will it be different for you and Mr. Mukesh Ambani? Give me a yes or a no answer. Price of Reliance Industries tomorrow at 9:17 a.m. in the morning, will it be different for you and Mr. Mukesh Ambani? How will it be different, Rahul? You tell me. The price is coming from the National Stock Exchange. Boss, Narendra Modi ji, Mukesh Ambani ji, Gautam Adani ji, Parag Mehta, and Rahul Rajput, all of them will have the same price because it's the same market, right? Will 9:17 a.m. in the clock change for someone who is a billionaire or someone who has 100 rupees? Indian Standard Time of 9:17 a.m., will it change for anyone? If you are in Bombay and if the time is 9:17 a.m., will it change? No, right? So time doesn't change for anyone. Price doesn't change for anyone. Now let's come to volume. Volume is the most misunderstood concept that traders currently believe in. Now, what is volume? Volume is total number of transactions taking place. And the primary problem that we all have is we take a trade after volume arrives, thinking that volume tells us institutions are buying. How many of you agree? This is what YouTube University has taught, right? That let the breakout come. If it comes with volume, then this is the confirmation institutions have entered. Now, let me explain the entire thing and then you tell whether this is correct or not. And I will prove it to you that this is nonsense. First thing, volume means total number of transactions. Transactions in Hindi we call soda, right? For any transaction to happen, you need to have a buyer and a seller. Do you agree? For any transaction to happen, you need to have a buyer and a seller. Now, right now, what I'm telling you is I am telling you how this candle is constructed in the market. I am literally telling you. So I will come to the strategy, but the strategy requires you understanding of two concepts. For me to help you understand these two concepts, I will have to literally tell you how this candle is manufactured in the chart. And that is when you will be able to enter before all of this happens. So now you know that volume means transactions. For every transaction, there needs to be a buyer and a seller. So when there is high volume, it tells you high number of transactions are there. Do you agree? When I tell you there is high volume breakout happening, that means higher number of transactions took place. Now the problem is when a retail trader ka chart looks like this. So this will show a green volume bar leading to the retail trader thinking that green volume bar means more buyers are there, and since the bar is big, more institutions are there. Fair enough. Is this what we infer? When we have red volume bars and when we have green volume bars, this is what 95% of people perceive, right? That low volume means sellers are less, and big volume green, that means buyers are more. Now I am telling you, for any transaction to take place, buyers are always going to be equal to sellers, because if you are not selling 5,000 shares, I'm not going to buy 5,000 shares. Is it clear to all of you? If you want to sell 5,000 shares of Tata Power tomorrow in the morning, and if there are no buyers, you'll not be able to sell. So when volume bar is visible, when volumes kick in, and when a breakout happens, there are people buying, but there are also people who are selling. How many of you agree? When a breakout happens with volume, yes, a lot of people are buying, but they're buying it from a lot of people who are selling. So the question is, who the hell is selling? And you will see majority of the breakouts that you trade end up like this. Majority of the breakouts that you trade, you enter and they end up like this, only to do this later. How many of you agree? 70 to 75% of all breakouts are going to do this to you. Why? Because you are liquidated. You are liquidated from the market. Now the question is, why are we liquidated? Why are we forced to kick out of the market? And what if I tell you institutions can't make money without kicking you out? What will be your reaction? You'll be like, no, 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 this doesn't happen. I'll prove it to you. The thing is, you are into capital markets, capitalism at its peak. People will do anything and everything to make money for themselves. They don't really care about you. So now let's understand how all of this is happening. And for me to help you understand this, I will introduce you to very simple 4 golden rules of the market. Why am I introducing these rules? I have not made them. I've just learned it from my experience. I'm not a creator or a guru creation of a strategy. All of this is my learnings from the market. And I've merged a lot of concepts, right? So now, whenever you're understanding a new strategy or a style of trading, they're always a school of thought. They're a way to think. How many of you agree? A strategy is not a money making machine, right? A strategy is a way to think, a way to look at the markets. And then there are rules of the strategy which you have to execute literally like a robotic human being, right? No matter what happens, I'm executing my system. So now let's understand these 4 simple rules and then start the strategy. So rule number 1 is stock market is a zero sum game, right? So I think everyone knows this. When it comes to trading, stock market is a zero sum game. If you are wanting to make 500 rupees from the market, it has to come out of someone else's pocket. Do you agree? If you're making 500 rupees from the market, it has to come out from someone else's pocket. Done. Number 2, there are 2 primary kinds of market participants in the world: retail traders like you and me, and institutional traders. Now, who are institutional traders? They are traders who have hypothetically unlimited amount of capital. They are the people who open and close the market. How many of you agree? We all wait for market to open. Yes or no? We all wait for the markets to open, right? that where is Nifty opening? Arey, someone is opening also, na, the market. How many of you agree? Someone is opening and someone is closing the market. They are institutions, right? Institutions are people whose bread and butter is the market. Institutions are those people who create trends. Institutions are those people who run the show. It's very simple. They have a massive amount of money, and whoever has massive amounts of money, they create the charts, they move the markets. Now, I don't find a better enough example than the scam 1992 web series, right? Harshad Mehta was not able to move Mazda, Ultratech Cement, ABB, whatever, just because he had some random strategy. No, he had money from State Bank of India, and that was pumping in the markets. How many of you agree? Stocks go up because when you pump money in, massive money is with institutions. Retail traders are big in number, but very small with respect to the investments that they make, especially specifically when I talk about trading, right? Investing my retail audience is very big, but when I talk about trading, retail audience ka size is very small. So there are two kind of market participants, retail and institutions. We obviously come into the retail category, and institutions can be people like investment banks like Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, Merrill Lynch. Have you heard about these names? Right? Correct. Number two, you have institutions like the Life Insurance Corporation of India, insurance companies, Vanguard, you've got BlackRock, you've got Saudi Arabian Investment Authority, you've got Singapore PTOs, you've got a lot of institutions, right? So now, if you combine the rule one and rule one says it's a zero sum game. One person has to win for the other person to lose. And then it says that there are two market participants, retail and institutions. If I combine these two rules, can I say institutions only make money at the expense of retail traders? Think and give me an answer. And FNO numbers kind of tell you the truth. 93% of people are losing, and that means 93% of institutions are making money. So basically, institutions make money at the expense of retail traders. Number three, for every buyer, there has to be a seller, and for every seller, there has to be a buyer. We've already discussed that in the previous slide, which means if I combine the first three rules, this is where you'll understand where the strategy comes from. If institutions want to be buyers, do they need sellers? This is the strategy. If institutions want to buy, can they buy without sellers? No. Now, I'll just draw something. If institutions want to buy, they can't buy without sellers. So they have to ensure that people sell so that they can buy. Does it happen with you? Has it happened with you? You buy at your double bottom, you buy at your support, the price kicks you out only to make a new high. Why were you kicked out? Why were you liquidated? Because at this point where you and me were planning to buy, institutions could not buy. Anyone wants to understand why? Why can't institutions buy with us? It's a systemic problem. Institutions cannot buy with retail traders because there is not enough liquidity in the market. Understand this, right? Just understand this, and this will help you understand the concept of liquidity. Everyone wants to buy at the support. Do you agree? Everyone wants to buy at an area of support, right? So let me just go to trading view just for better view, and I think you'll enjoy this thoroughly. And for everyone who's telling me, can we start the strategy, please sir, let me tell you, right? I can start the strategy, complete it in 20 minutes, you'll not understand anything, and then the next day you will come and say that, this guy didn't teach me anything. The thing is, uh, for you to learn a strategy, if you don't go deep dive and learn how the exact metrics work, you'll never be able to utilize everything that I'm talking about. How many of you agree, right? I'm going logic by logic because the strategy coverage will literally happen in 25 minutes. The point is, how do you really look at it from this lens? How do you really identify where to trade, where to not trade, and how do you understand this with logic, right? So logic is really important. So now let me help you understand this. So for those of you who have traded in the past, I hope all of you know what do people do in this kind of a scenario. Can anyone tell me? So there are two scenarios happening here, right? Number one is people make a trend line, and then there are some people who are going to be looking to buy over here. Please tell me if I'm right in understanding retail style of trading. Give me a yes, right? So this is one model of trading where people are just going to create a trend line and then they're going to buy it, right? The other is, there is a, there's a falling wedge kind of a pattern, chart pattern coming in. So those people are also buying it, right? So there are two kind of people who are buying, right? So people A. So I will write A category, which are trend line breakout buyers. I'll write B category, which are rising wedge breakout buyers, which is some pattern. And then you also have some people who are going to be people which in the C category, which will be buying because the market is at a support. Do you agree? There will be people who will be buying at point C, which is like a support level. So you've got more buyers here, A, B, and C. How many of you are following me? Right? A, B, and C. So there are A, B, C people, right? And then finally, you've got the W pattern traders, which are double bottom traders who are going to be buying at D. Do you all affirm, right, that these are the four different kind of retail traders buying in the same leg, which is the bull leg? Like everyone wants to buy, but everyone is doing it at their own different styles. And obviously, like there will be indicator traders, etc., etc. Right? So now let's try to understand how this entire model works. So now every retail trader A, B, C, and D, all of them are interested to buy. That means if they want to buy, they need sellers in the market. Does it? Do you all agree? If they want to buy, they need sellers in the market, right? Now try to understand. Let me give you a hypothetical situation. Institutions also want to buy the stock. Institutions, they also want to buy the stock, right? So if they want to buy, they're just waiting for an area to buy the stock. And if they want to buy, they need sellers. Retail traders are buying, they also want to buy, they also need sellers. So if retail and institutions both are on the buy side, who is on the sell side? No one. Yes or no? If majority of the retail is trying to be on the buy side and institution thinks that we also want to buy, then there will be no one. So now at all of these A, B, C, and D points, right? So I'll just mark these points really quickly. So let's say one point is here, one point is, let's say, here. Some person is trying to buy here. So all of these are the points where retail traders are literally trying to buy. And when they are buying, they are going to have a lack of supply. So for example, all these A, B, C, and D people combined are trying to buy, let's say, 10,000 shares. They will only have a supply of, let's say, 5,000 shares. So what basically happens is when the price is here, everyone wants to buy. When the price goes a little higher, less people want to buy. Do you all agree that when the price was literally at rock bottom, okay, so when price was literally at rock bottom, more people wanted to buy. Then when the price moves a little higher, less people want to buy. When the price moves a little higher, less people want to buy. And when the price finally moves out of their buying range, less people want to buy. So now try to understand the problem at this very point. At this point, institutions want to buy, but they don't have enough supply of shares. Do you agree? Institutions are wanting to buy exactly where you are buying. But their problem is, boss, I want to buy 20,000 shares. I don't even have supply of that. So let's say if there are 5,000 shares that are in supply and there are 10,000 retail traders who want to buy. So already the demand is higher than supply. So all these orders will itself not get executed. If institutions add their 25,000 shares that they want to buy, what will be the total demand? Can you tell me? If institutions place their orders also at this point, the total demand will spike up to how many shares? 35,000 shares, right? So now the demand will be super high, supply will be super low. And if that happens, one thing is sure, at the maximum, out of these 25,000 shares, what is the maximum number of shares in institutions can buy? In the extreme case, I put my 25,000 shares in the market. What is the maximum supply at this point? Can you tell me? This is very interesting. The maximum supply is 5,000. So even if I punch my order, the maximum number of shares that I will buy is 5,000. Will it serve my purpose? That's my question to you. Will it serve my purpose? No. And if I think I can just buy it at market price, that means I will place or punch an order which will literally make the price go up like this. That means, am I that stupid that I will punch a big order and because of my order, the price is going up? Do you think institutions are that stupid that they will move the price because of their own order? They're not dumb. When you are a bulk buyer, you always want to buy at lower prices. So the point is, Institutions cannot buy where you want to buy because they want you to be on the sell side. Only then their purpose will get achieved. How many of you have understood this simple logic that institutions and retail traders cannot be on the same side at the same time? The market doesn't allow it. So what will institutions do? Institutions want to buy 25,000 shares. So what they feel is, boss, our objective is very simple. Let's find a place in the market where we can find 25,000 retail traders trying to sell the market. Fair enough. If I am an institution, I will reverse engineer this. I will say that where is the place where I can buy, where I can get 25,000 people selling in the market. So let's try to understand how does that work. So now I want to buy 25,000 shares and I only have 5,000 shares available in the market. As the price moves higher, let's say as the price moves higher to this point, this is the scenario where you've got about 10,000 shares, of demand and like 5,000 shares of supply. So now what institutions are thinking is, okay, let's do one thing. What if we punch a 10,000 share short position, or let's say, let me just turn the numbers around a little so that it's more understandable. So there are about 10,000 shares of buyers, right? I'll just write B over here. And there are 7,000 shares of sellers over here. So now the institutions realize that, okay, at this point, we have got 10,000 buyers, 7,000 sellers. So the institutions think, what if we place a 5,000 share sell order? I repeat, at this point, this is point ABC. At point ABC, institutions think if we punch a 5,000 share short sell order, it will take the total supply to 12,000 shares. Do you agree? Do you agree? If we short sell an additional 5,000 shares, it will take the supply, the total supply at 12,000 shares, correct? Now, if the institutions do this, will the total supply exceed the total demand? Will the total supply exceed the total demand? If that happens, if that happens, will you see the price go down like this? If supply exceeds the demand and all people have already bought it, try to understand, all retail traders have already bought the shares, right? So now, if at this point where very little retail traders are interested, just think about it, right? Let's say there are a total of 10,000 total retail traders in the market. All of them have already placed their buy position. Now there are no retail traders trying to buy the stock. And unless and until institutions buy, will the price go up? Think about it, boss. Price goes up because of money kicking into the market. I am telling you, every retail trader has bought already at this point. Institutions will not buy. That means the price will not go up. How many of you are understanding this? You need institutions to come in for them to move the price. So for retail traders to make money, institutions have to be in. But institutions can't be in because they can't buy. How many of you are understanding the problem statement here? Now I will tell you how institutions have the solution for it. The problem statement is, retail traders are waiting for institutions to come. Institutional traders are waiting for retail traders to go on the sell side, right? So retail traders are waiting for something that will not happen. So at this point, what institutions do is they figure out that, boss, every single buyer that is there in the ecosystem will have their stop loss orders below the area of demand somewhere here in this patch. How many of you agree? Like someone will have their stop loss here, someone will have a stop loss right here, someone will have a stop loss right here, someone will have, like, in the range thoda bahut upar niche, they will have their stop loss orders. Do you agree? Everyone who bought here, everyone who bought here, everyone who bought here will definitely have a stop loss order. Will these stop loss orders be a sell order or a buy order? That's my question to you. Will these stop loss orders be sell orders? Yes. And will they be pending orders or executed orders? Will they be pending orders? Orders which are in pending status, not executed. Na? These orders will get executed when the price comes here. Abhi to price upar hai na. Abhi right now the price is not come here. So it's in pending status. So can I write there will be 10,000, or okay, how many retail traders were there? There were about 10,000 retail traders, 5,000 were able to buy. So let's say there were 5 or 10,000 pending sell orders in the market. Can I say that? And all of these are stop loss orders. Correct? Perfect. So now the institutions are thinking for us to buy 25,000 shares, we need to find a place where we can see a lot of sellers selling. Now, can you spot that area where you are currently finding 10,000 sellers? Think and give me an answer. Where is the point where you can potentially get 10,000 sell orders if stop loss of retail traders are executed? Correct? So the institution's ka objective is very simple. If we can get the price from here to here, we will get 10,000 shares of extra liquidity. Yes or no? We will get sellers of 10,000 shares that we want to buy. Correct? Number two, institutions also know that there are some intelligent retail traders who, if they see a candle like this, will also be involved on the short sell side of the trade. How many of you are understanding this? What happens when support breakdown happens? People short sell, na? When support breaks, people want to buy puts, they want to short sell the market. So there will be some extra 10,000 smart people coming in and selling the stock, short selling. This will lead to 10,000 extra shares of liquidity. How many of you agree? Nitin, short selling means that you sell first and then buy it back later. Understood? Usually what people do, they buy low, sell high. You can also short sell in the market. You can sell at 100, wait for it to come down, and then buy it back at a lower price. So can I say there will be 10,000 extra sell orders coming into the markets by retail traders? Do you agree? Do you agree? Yes. So now what is the total sell orders? If the institutions are able to get the price here, what is the total number of total sell orders that are in pending status at the moment? 20,000? 20,000. Amal, 20. 10,000 to retail traders ka who were on the buy side. Now, when the institution punches in their 5,000 extra sell orders, price starts to fall and the price starts to come here. This will lead to 10,000 extra short sell traders introduced in the market, which gives the total liquidity of 20,000 pending sell orders or 20,000 sell orders in the market. Okay. Now, these people, the 10,000 people who sold because the markets were falling. Okay. Please repeat the last part. Okay. So you have to understand there are A, B, C, D guys who are on the buy side of the trade. All of them will have a stop loss order. Yes or no? This part is fine. And just before you ask this question, you don't need to track all of this. I am just telling you what happens in the back end. I hope you're understanding. आपको ये सब करने की जरूरत नहीं है live market में. I am just telling you how it works at the back end so that you understand the logic behind why we are doing something, right? So now there are A, B, C, D guys. These are all on the buy side of the market. They all have their stop loss orders, which gives you 10,000 pending sell orders in the market, right? Institutions want to buy the stock. At this point, institutions want to buy the stock, but they are not able to buy the stock because they have no sellers. So they are trying to find that area of the chart where they can get a lot of sellers. Amit, are you understanding? At this point where my cursor is, they are trying to find where can we find sellers. The institutions figure out that if we can get the price below this area around 637, we can get 10,000 extra people who are selling, because everyone who has bought the market, they will have their stop losses here. Agree or disagree? So if there are, hypothetical example, if there are 10,000 people who have bought the stock, you will have 10,000 stop loss orders somewhere near the support area, somewhere below the support. So this is 10,000 sell orders that will get triggered if the price comes here. Make sense? If the price comes here, these 10,000 sell orders will get triggered. But when the price comes here, there will be 10,000 extra sell orders that will come because some people would want to buy puts. Some people would want to short sell the market. Do you agree? There will be 10,000 extra sell orders for because of people who are now trying to play this trade that I will short sell, my stop loss is here, and I will expect the market to go down. How many of you are understanding this? Now, all of these 10,000 guys, जिन्होंने अभी sell किया है, will they have a stop loss here? Will they have a stop loss here? Give me a yes or a no answer. Will this order be a buy order or a sell order? You will tell me. अभी मैंने short sell किया है, तो मेरा stop loss order buy order होगा. Amit, how is it a sell order? Boss, when you are buying at 100, your stop loss is 90. So you will sell at 90 to get out. But when you are selling at 100 and you want the price to go to 90, your stop loss is 105. So you will buy it back, no, when it goes up because you were betting it goes down. So your stop loss order will be a buy order, right? How many of you agree? So can I have 10,000 pending buy orders here? Can I write this? Rohan, I can see your messages. I can see your messages. Don't worry. All right. So can I say there are 10,000 pending buy orders in the market? Perfect. Now I'll remove this. So now what the institutions know that if we are able to get the price here, we will get 20,000 people who are selling the stock around this price, which means we can buy 20 out of our 25,000 shares. How many of you are understanding this? Correct? Everyone's with me, right? Let's say institutions short sell 5,000 shares. They get the price below this area. Now 20,000 sell orders are flooding in the markets, and this is where you need to use your brain. 20,000 sell orders, can they be executed if there is no buyer? Can these 20,000 sell orders be executed if there is no buyer? Who is the buyer? Who is the buyer? Who is the buyer? Institutions. And institutions are not buying 25,000 shares. So they're buying the 25,000 shares that they wanted to, plus they're also buying the 5,000 shares that they short sold. How many of you remember this? 5,000 शेयर बेचे थे ना ऊपर, उसको भी तो कवर करना पड़ेगा, right? They did not want to go short on the market. So now they will buy 30,000 buy orders of the institutions. And how many total sell orders are there in the market? Can you tell me? How many total sell orders are there in the market? 20. So when the price arrives here, buyers are suddenly more than sellers. And this will lead the price to make a candle like this. Do you agree? The price will make a sudden reverse green candle like this. Have you seen this happen in the market? That there is a breakdown and almost immediately there's like a green candle popping in, right? Now the institutions have bought all that they wanted to at the same price where you bought. Have they achieved their objective? Just listen to me on how the process is working. I will tell you how to identify. Go one step by one step. Don't go two steps ahead. You will not understand anything. I am just trying to help you understand how things work, guys. Give me 1 hour. Give me 1 hour. Trust me, you will understand a lot. Why won't include the 5K short told in the target 25? Ashish, boss, मैंने आपको बोला है. I have told you that you want to buy 25,000 shares. So 25,000 shares should be my holding, right? Upar, I have sold 5,000 shares. So now I am negative 5,000 now. If I only buy 25,000 now, so 25,000 plus minus 5,000, I'm only having 20,000 shares. Now my boss told me to buy 25,000 shares. How many of you are understanding? I will buy 30,000 now. I will not buy 25,000. I will buy 5,000 more because I have to cover that. So now when I cover my position, 30,000 shares are greater than 20,000. That means buyers will come in. So now institutions are done with their buying. without the price breaking out. How many of you have understood this? Institutions are done with their buying without the price breaking out. The price is bloody in the same range where you and me entered. Now, when the price hits the stop loss of these guys, they will punch in 10,000 buy orders. Do you agree? Institution ka buying is done. Now these people who short sold the market, they will be panicking. So their stop loss orders will get executed. And these stop loss orders are buy orders or sell orders. We wrote it here, right? Now, if they want to buy, do they need a seller? Radhika, sell कैसे होगा बाबा? They'll be buy order na. I short sold. I sold na. So I sold at 100. I want the price to go to 80, but the price is going to 105. So will I get out of my position, Radhika? Will I do that? I'm selling something at 100. I'm waiting for it to go to 80, but it is actually going to 105. So I will square off and get rid of my position. Now, when I want to buy, do I need a seller? When I want to buy, do I need a seller? Are all the sellers out of the market over here? Are all the sellers already out of the market? So there will be no sellers. So if there are no sellers, let's say I want to, there are literally no sellers in the market and I want to buy something. For example, there is no one selling the iPhone in the market and you want to buy iPhone. And there are 10, there are 10 people who want to buy iPhone and there is only one iPhone in the market. What will you do? You will execute it at high prices. And this is what actually causes the breakout. Now, did you understand what drama unfolds when a fake out happens? This is called understanding order flow and liquidity. This is just a brief explanation on how things work. I hope you get the point, right? I don't want to complicate things. I'm just trying to explain why institutions and retail traders will never be on the same side of the trade all the time. And for anyone who feels, sir, stop loss ही नहीं लगाएंगे, तो boss, stop loss, if you don't put stop loss, you will have a big loss. So understand the point. Putting a stop loss is the right thing to do for a trader, but that is the exact reason why we are losing money. How many of you are understanding this irony? You don't put a stop loss, you are not managing risk, so you can't make money. But if you put a stop loss, that stop loss is used against you. So the solution is not to think ki stop loss nahi lagayenge. We'll not put stop loss at all. No, no, no. The solution is figure out where these institutions are buying and then create a strategy which lets you buy alongside them. How many of you are understanding? I am not here to compete with the institutions. I have a simple objective. Just find out where they are buying and find out where they will do this shit. So wherever they will do all of this drama, I will stay out of the market. And whenever they are here to make a big move, I will just get involved in the market. I hope you've understood all of this, right? My objective is not to complicate anything. I just wanted you to think on how the institutions think and not how we are thinking, right? So I hope now you understand when there is big volume coming in, right? And I'll show you like multiple examples. Let me just open up one random example and then just show it to you, right? I'll open up volume. Okay, so now this is what a typical retail trader chart looks like. Okay, so I'll just show you something over here. Okay, just give me some time. I can see a lot of your questions. Give me like, is it okay? Can we have like a compromise? Give me 15 minutes. Let me speak non-stop, right? Any questions you have after 15 minutes, throw them at me, right? Because if I look at the chat box, I'll just get distracted. I have 2 or 3 more, things to, tell you, and then I will, take all the questions that you have, right? Now, so a typical retail trader chart looks something like this. Green and this is red. Are you all with me? A typical retail trader ka chart looks like this. Okay. Now, what you can understand from here is simple stuff. That when the price is breaking out over here with volume, what do you actually see? You see that the price broke out, there is a candle closing, and you can also see there is so much volume coming in. So everyone is thinking institutions have arrived. How many of you agree? Everyone is thinking institutions have arrived. There is big confirmation, ascending triangle hai, breakout hai, everything is there. Let me go buy. So 95 or 96% of all institutions are going to go buy this. Sejal, basically, according to retail trading methods, if the price is crossing below the above the previous resistance with big volume and with big candle, people usually feel that this is where institutions have arrived and you should buy. This is what 95 to 96% of all people currently think. I hope you're understanding, Sejal, right? This is what the mass market audience thinks, because everyone has just memorized key volume is great, candlestick closing is there, so let's buy. My question is, and please give me a logical answer. My question is, okay, you want to buy here, no problem. Please tell me who got the price from point A to point B. Give me an answer. Who got the price from point A to point B? Did it come normally? Did it come like this only? Retail traders. Come on, come on, come on. Do you really think retail traders got it? Institutions, right? Institutions got the price from A to B, right? Point B is where the maximum volume exists, because point B is where retail donkeys entered. Think, okay? Point A to B is where institutions started the move. Okay. You are entering when the party is over. Try to understand. When the volume is high, for every buyer, there is a seller. So at point B, yes, a lot of people are buying, but a lot of people are selling too. How many of you are understanding this now? Try to understand. Try to understand. I am telling you, let's not try to buy at B. Let's try to focus at A, where all the drama started. Will it not make more logical sense? I know institutions are not here for trading. Institutions are here to put their money for at least 6 months, 1 year, 2 year, 5 year. How many of you at least know this? Institutions intraday or FNO trading करने नहीं आए हैं. They are not here to do all of that stuff, right? Right. So what I'm saying is, when the price is at B, every retail trader in the world will look to buy. We will have to pause and do nothing. Is the first step of the strategy clear? The strategy that now I'm discussing with all of you is the order block or the origin strategy. I'm just starting with that. I will come to all the rules and everything. Let me just have this, do institutions futures karte hain. You have to, okay, you have to understand this. Institutions don't make money in futures or options. It is just a hedge that they take. Institutions do trade in futures, they have different desks, but understand this, right? Institutions ka futures and options mein, if 100 crores is put in, investments may they have 10,000 crores. So you tell me, what is more important number, 10,000 crores or 100 crores, or maybe 50 crores, or maybe 500 crores? So I am not saying they don't trade in futures. They do trade in futures. They do trade in futures. My point is, when the price has moved from point A to point B, you are currently sitting at point B. What will 95% people do? Buy here randomly, thinking volume bada hai, more big buyers have come in. I am telling you, don't buy at B. When you are at B, identify what was A. Can you do this? I think it's fair enough, very straight, counterintuitive. When everyone is looking to buy, don't sell, just don't do anything, and find out where did this move originate from. Can we all do that? And there is a process to that. I will show you. Okay. How do you do that? Let me help you understand this. But before that, let me tell you how exactly this entire model works. So now you have to get introduced to the concept of market structure, displacement, and then liquidity. Okay. Three concepts I'll introduce. Very simple. And from now onwards, we are starting the strategy. I hope until now you're all very comfortable with whatever we have done, right? Krish, whatever questions you're having, throw them at me once I'm done. Okay, throw them all the questions at me. I will answer everything. Just give me like my 15 minutes. Okay, because you'll enjoy it. Now, first and foremost, you'll have to understand what market structure is, right? So I'll just take you to my slides and I will directly go and show you something here. So just give me a minute. I will take you to okay, give me okay. I'll take you to market structure, right? So I hope all of you have probably looked at this in your early days of trading, and I also know that you didn't give a shit about this. How many of you agree? When I was a trader, I was like, market structure, hey, it's a kiddish concept. Like, who cares? Move on. Support resistance, it's a kiddish concept. Move on. Okay, give me the strategy. This is what a lot of people do in their trading, right? I am just trying to help you internalize that the mistakes that a lot of people do. So now market structure is basically a way to understand a trend, right? So how many of you have used a stencil in your childhood? Have you used this stencil kind of a thing where there are shapes created and you are using crayons, coloring it, right? Have you used this? Indian maps, very good, right? So, market structure is like a stencil. It gives you a ready made template to tell whether a stock is in an uptrend or it is in a downtrend. Is it clear? Market structure is like a stencil, it is like a template that you are using to identify whether a stock is in an uptrend or it is in a downtrend. Fair enough, everybody? So, what is an uptrend? It is constituted of higher highs and higher lows. Very simple. So, let's say the stock started from 100, it moved to 110, then it came back down to 105, then it moved to 120, then it came to 115, and then it moved to 130. So, what's happening? Every time the stock starts from a low, it moves to a high point, then it makes another low, but this low is higher than the previous low, so it is basically progressing. Then it makes another high, and this high is higher than its previous high. So the previous high was 110, the current high is 120, the previous low was 105, the current low is 115. So it again makes a higher low, then it again makes a higher high. So when the market consecutively is making higher highs and higher lows, we call it as an uptrending market. Is it simple enough? I don't think it's very complicated, very simple stuff. I'm just telling it for people who probably don't know about this, right? And similarly, for a downtrend, let's say you start with 130, the price comes down to 120, then the price moves up to 125, then the price moves to 110, then the price moves to 105, and then the price finally comes to 100. That means I start from a high, then I make a low, then I make another low which is lower than the previous low, and then I make another low which is lower than the previous low. I make a high, the next high is lower than the previous high, the next high is lower than the previous high. So when consecutive lower highs and lower lows are being formed, I am in a downtrend. Fair enough, everybody? This is a downtrend, that was an uptrend. Now you have to now understand that we will always have to follow the market structure, right? And we will trade in the direction of the market structure. So the trade direction market structure will show you. So now with that market structure being understood, let's start to understand what is displacement. And this is a very, very crucial concept. So you have to understand one thing, right? Before you understand displacement, you have to understand that whenever institutions arrive in the market, they have a problem. And this problem is the strategy. Basically, the strategy is created out of the problem that institutions have. Now, all this while I was ranting throughout the session, retail traders are this, retail traders are that, they have this problem, they have that problem. Don't you think institutions would also have some problem that we can take advantage of? They are taking advantage of our problem, which is adamancy towards retail concepts, right? But there is one problem that they have. And let's try to figure out what is the problem that they have, right? So let's quickly go understand this, and then we will start with the crux of everything, right? So I'll go back here to my slides, and I will go back, and this is where you understand the game. Ladies and gentlemen, be super alert, because now the next 15 minutes will blow your mind away. Now, first things first, understand this entire business or game from an institutional lens. Rule number one: institutions are 100% dependent on retail traders. How many of you have now understood this, right? I told you institutions can only buy when you are forced to sell, and institutions can only sell when you are forced to buy. Now, there is one more scenario in this where happens, where let's say I am Morgan Stanley, and let's say there is a trader called Goldman Sachs, right? There is someone called Goldman Sachs, right? So now let's say I want to buy 10 lakh shares of Tata Motors, and Goldman Sachs says I want to sell 10 lakh shares of Tata Motors. So when I have a buyer and a seller ready-made, a broker will come in the middle and say, boss, Citibank wants to buy 10 lakh shares. Morgan Stanley wants to sell 10 lakh shares. I will, be the broker of the deal. and you can execute the deal without coming into the market. This is called a block deal. Have you heard about this term, block deal? So when two institutions trade with each other now, they do it via block deals, because they don't want 10 lakh shares of volume to come into the market, move prices. They don't want to do all of that stuff. They would rather pay, let's say $1 million, or let's say 10 crore or 5 lakh rupees or 10 lakh rupees or whatever the case is, to a broker, and say, Motilal Oswal, please, be the broker for this deal. I want to sell 10 lakh. He want to buy 10 lakh shares, and they will execute the block deal like this. Is that okay? So when institutions deal with institutions, they are smart to deal with each other. They don't want anyone to have a profit or a loss. Like, they don't want anyone to face a problem. So when institutions trade with institutions, it's fairly simple. The opportunity comes when institution is buying or selling against retail. Is that understood? Some people were mentioning, right? What if institution is buying from another institution? They usually do it via block deal. How many of you are understanding this? When institution, like when a big institution trades with another big institution, they have other means to execute the trade. Is everyone with me? I hope you're understanding. So institutions are super dependent on retail traders. And in the last 4 years, from 1 crore active retail traders, we are at 5 crore active retail traders. That means retail traders have increased, and so has manipulations in the market. Now, can you correlate? As more and more retail traders will come in, it will become even easier for institutional algorithms to manipulate the markets, because there is more liquidity coming into the markets. How many of you are understanding this? It's very similar to how a casino operates. If only five people go to a casino, the casino will be in a loss. But if 500 people step into the casino every day, the casino will be profitable. How many of you agree? If there are only 5 people walking into the casino doesn't have a lot of outcomes. So hence, they want to get 500 and 5,000 people in, so that their probabilities start to work. Similarly, institutions want more retail traders to be in, right? Now, rule number 2 is institutions are always going to buy and sell big quantity, right? Institutions always want to buy and sell big quantity. How many of you agree? Yes or no? Correct? Now, institutions want to buy and sell big, large chunks of orders, but does retail traders have the capacity to give liquidity in the same quantum? I am an institution. I want to buy 5 lakh shares of Tata Power tomorrow, 9:16 a.m. in the morning. Can I ask all retail traders of India to come and buy Tata Power shares from me? Is it practically possible? At 9:16 a.m., the point where I want to sell 5 lakh shares, I will suddenly have 5 lakh buyers? No. That means, although institutions are very dependent on retail traders, they cannot execute their entire order in one attempt. Do you agree with me? I want to buy 10 lakh shares. I want to buy 1 lakh shares. I cannot execute it in one go. I will have to split up my order into multiple parts. Now, you tell me, what is good for an institution? Execute 1 lakh shares in one attempt and get nothing, or execute 1 lakh in 3 parts and at least execute 2 out of these 3 parts at a lower price, and the third part you execute at a higher price, so your average price is still better? What would you prefer? Either everything or nothing, or execute it into 3 splits. So now let's say I have a 1 lakh ka buy order that I want to punch in, and I'm splitting it into 2 parts. Now, don't ask me, will they execute it into 3 parts, 4 parts, or 2 parts? They are not WhatsApping me what they are doing. All I know, all I know is they will definitely split the order. Ganesh, why everything or nothing? I'm saying everything or nothing makes no sense for them. Now, I want to buy 10 lakh shares. There are only 10,000 shares available in the market. Does it make any sense for me to just buy 10,000 shares and then sit? Like, I am saying, either I will buy 10 lakh shares at my price, or I will not buy anything. So if I will not buy anything, I will miss the opportunity. And if I try to buy everything in one attempt, I will buy it at very high prices. So it's better that whatever supply is available at the moment, let me just take all of that. Does it make sense? All of you, are you with me? So now let's say I split this order into 2 halves of 50,000 each. Now the thing is, when I execute my first part of the order, will it lead to price moving up and volume kicking into the market? Because obviously, if 50,000 shares are getting into the market, the volume will not hide it, right? The price will move, the volume will move. That means whenever price and volume comes in, yes, institutional activity starts. But these 50,000 orders are meant to only be executed at a specific price level. After these orders come into the market, the price will not move forward. What I mean to say is, when institutions execute one part of their order, they will leave a footprint behind. Is that clear? When institutions execute this order, they will leave a footprint behind in the form of price and volume. So now let me help you understand how this thing works, and then you will probably be able to execute the strategy completely. What I'm trying to say is, when institutions want to buy a small chunk, they will definitely, they are the ones who got the price from A to B. This is the 50,000 orders that they executed. The point is, these 50,000 orders were started from A and they ended at B. They are not starting at B. How many of you are understanding this very light difference? They are not starting at B. They are ending at B. And when these orders end at B, it means that institutions are only going to buy more at their original buy price or somewhere near to that. They are not stupid enough to buy more at higher prices. So at point B, institutions, yes, they were there until B. Yes, they were there until B, but now they're not. That means if institutions are not going to buy at B, will the price go higher? That's my question to you now. If institutions temporarily stop their buying at B, can the price go higher? No. And at point B, retail traders who are buying the breakout are expecting the price to go higher. Fair enough. Retail traders who buy at point B are expecting the price to go higher. What happens when you expect the price to go higher and it does not go up for the next 60 minutes? What will you do? You buy a stock at a breakout, next 60 minutes price does not do anything. Now you want to sell. For you to sell, do you need a buyer? For you to sell, do you need a buyer? Institutions are not interested to buy. So there are only retail buyers, and majority of the retail buyers have already bought the breakout. So can I say there is a lack of buyers at point B now? Suddenly. Breakout hua at B. So every retail trader bought. Institutions are already done with their buying. So now at point B, retail traders want to sell, but they don't have a buyer. Now, what happens when you want to sell something and there is no one interested to buy? Do you lower down the price? You want to sell an iPhone, no one is interested to buy. You drop the price, right? So now, when these prices are coming down, you have to understand that this is not because of institutions selling. This is just happening because the price is not able to find enough buyers and a lot of people want to get rid of the stock. Now, understand two things. When people who bought the breakout at B see that the price has come down like this, will they start panicking? That, okay, boss, we bought at this price, now the price is coming down, let's get out. So slowly and slowly a chain reaction will start. Some people will start selling here, they will get the price to a lower price, and then more people will sell, and ultimately the price will get sold off until it reaches where the buyers are currently waiting. Interesting bit is, the price took this much volume to go from A to B, but it came back from B to A with literally 1/3 the volume, which suggests that people who created the move from A to B are still in the trade. How many of you feel it makes sense? A say B, I went up with so much volume. So I bought a lot of shares were transacted. But B to A, the price came back with like 1/3 of the volume, 1/4 of the volume. That means all these mosquitoes, all these chintu mintu pintu traders were squared off from the market. Make sense? Correct. Now, all of these Chintu Mintu Pintu traders are literally drawing this trend line, thinking that boss, अब तो sell का trade बन रहा है. How many of you agree? Now these Chintu Mintu Pinku Tintu traders, whatever the name is, they are just trying to now randomly draw a trend line and say that okay, the market is now trying to fall, and there's a trend line, now everything is becoming bearish. Your RSI is showing you values lesser than 40. Your MACD is going somewhere deep underground in the drain, and then everyone is saying all your screeners and scanners are showing this stock, it's bearish, blah blah blah. Stock is down, what, how much percent? Stock is down 14% from the high. It's a very weak stock. Bullshit. This is what happens next. Now, do you want to understand why did this happen? Why did the price come to this area? What happened here at point A that all the orders were taken here and then the price moved higher? Interested to understand this now? Now, let me explain what's happening. Okay. Now, just before I start this, I'll tell you one very interesting thing. Okay. I'll tell you one very, very interesting thing. And that is, before the price moved up from A, I'll tell you what retail janta is thinking. Okay. Very, very interesting, actually. Do you agree? This is what retail janta is thinking when they see this. Do you agree? Do you disagree? Write a yes or a no. I show this to you. You are like, boss, we will sell. It's a sell trade. It's so easy. It's a sell trade. What will we do? You are invited to sell where they wanted to buy. Now understood the concept? You were invited to sell where someone else wanted to buy, because at point A, they can't buy if no one else is selling. How many of you are understanding the entire game plan now? You are being invited to sell at a lot of places where someone else wants to create a buy position, because the market runs on liquidity. Okay. Now let's understand how to take a trade, how to identify this, how do we identify all the concepts. So I will now cover all of that stuff. And while I trade, explain the strategy and its execution to you with the stock selection rules, etc., I will use all these concepts that I've explained so far. Fair enough? Bhunesh, stock selection is something that we'll explain, later. I'll tell you what happens at B, and I'll tell you what to do when the price comes to C, and I will tell you some observations to make everything right. Okay, but institutions could have bought at April bottom. Okay, you try to understand. Institutions might have created some positions which have made the price moved higher, right? This could have been the story that institutions probably wanted to buy in April. What you have to understand is, if institutions were aggressively buying at this price would have gone up like this. You have to understand that fundamentals change, things change, and then institutions make their own decisions. So at this particular point, maybe things were not going well for this company, or maybe there was some other thing which made the institutions not buy it at that point of time, or maybe there wasn't enough liquidity in the market. So there could be hundreds of reasons, right? I am not here to debate why did they not buy there and why did they buy here, right? What I'm trying to tell you is, if they have bought, they will leave a footprint behind. My job starts from there. How many of you are with me? See, it is not science. It is not science. Okay, I can't prove everything with you. What I can tell you is what has happened. I know with the 70-75% accuracy that the way I am thinking, it probably works, right? Cool. So now this is where we start, June 26th and then 18 July, right? So let's understand displacement, and then let's understand identification of an order block, and then let's do the examples and the execution of the strategy, right? Now, let's understand what a displacement is. So first and foremost, the English word displacement essentially means a sudden move in the of anything, right? Sudden movement, or the shortest distance from point A to point B, or a shift of location is what a displacement is, right? So now you have to look for a displacement, and this displacement happens when an uptrending stock breaks its previous high. So I'll just write PH over here. So when you break your previous high with big volume and a big candle. When I say a big candle, I mean to say aggressive candle, big body candle. You can have one single candle like this. You can have multiple smaller candles like this. Doesn't really matter. All it matters is you should have a big thrust, a big powerful move coming into the markets. Is that clear to everybody? So all I'm saying, I call something a displacement when the price moves from point A to point B by breaking the previous high. And the condition is it has to break the previous high with a big body candle and with decent volume. Okay. Why is this important? Big volume tells me institutional activity has existed here, and big candle size tells me that there was a imbalance of demand and supply. How many of you are understanding this? There is a reason why I need these two things. This is not random. I need big volume because I want to see if institutions are really in this particular script, whether it's Nifty, Bank Nifty, whether it's whatever the case is. And I need a big candle to see if there was a imbalance of demand and supply, right? Try to understand prices move up or down because of demand and supply, right? And if there is big volume that is creating this big candle, right? Sawmill, you are not able to understand, right? Every YouTuber, every person will tell you to buy after B. I am telling you to not buy after B. That's the primary difference. That's what I'm trying to tell you. People will tell you that from B, the move will start. I am telling you at B, the move will temporarily end. You have to find out another place where the move will start. Okay. What I'm trying to say, if the price has to go from A to B, and if institutions have taken the price from A to B, they will leave their footprint in the chart. Do you agree? Do you agree? Got it? If institutions have made the move from A to B, the move will come with big candles and it will come with big volume. Simple. If the if it does not happen, that means institutions are not involved. Okay. So if I take you to the previous chart, can I say that the price moved from A to B and it did so by breaking the previous high over here? Can I say that? Can I say this was the previous high? I'm removing the breakout area. This is the previous high, right? The price broke with volume and with big candles. Now, is it fair enough to everybody? Now, as I'm saying, for every buyer, there has to be a seller, and the volume ka color does not matter because I've told you, right? If people are buying, there is someone selling. So, usually, what I like to do is I like to change my volume color to like a constant color. I can keep it gray, I can keep it white, I can keep it whatever, right? So, what I'm doing is I'm just marking, like, I'm just making all my candles very uniform in nature because I just want to know how many people bought and sold. Is that okay? Now, when the price has moved from A to B, this entire area is called a displacement. This is called a displacement. Once the displacement is identified, when the price is sitting at point B, my job is to find where did this originate from. Is that clear? Can we move to the next step? Displacement is done. You've identified the displacement. Now the question is, where did this move originate from? Like, where were the orders kicking in, right? So there are two things that you want to know. Number one, especially when you're trading stocks, you will always observe, and this is contrary to what everyone has told you. Whenever a big move is about to start and it, starts moving, for example, this is the big candle that you see. The candle before this will be the place of the lowest volume. I repeat, what I'm trying to say is when the volumes dry up completely, that is the point of volume expansion kicks in, and that is the time when a big move kicks in. So what I'm trying to tell you is just keep this as your observation, that whenever a big move starts, right before that there will be a dry up of a lot of volume, which is contrary to what everyone tells you. Everyone tells you to be in the stock when there are a lot of volumes. When there are a lot of volumes means a lot of idiots are already in the trade, so now there's no need for me to be in the trade. When the volumes are dead, that means no one is interested to buy the stock, and that is where we operate. So now a to B is a displacement, you know it. When the displacement happens at point B, now you have to identify where did this displacement start from. That is known as the origin or the order block. How to identify that? So very simple. The body of the last big body red candle. So the last big body red candle before the big displacement move is called the order block. Very simple. The body of the last red candle before the big displacement up move is called the order block. Now, if you have a wick, if you have a tail, etc., cover that also. No problem. Is that okay? The last down candle before the big displacement is your order block. Is it clear to everybody? If you have like a wick or a tail, you can just incorporate that, doesn't matter. But what I'm trying to tell you is the body of the last red candle before the big displacement is your order block. Let me show it to you, it will be clear. Can I say this is the body of the last red candle, last big body solid red candle before the big displacement? Can I say this is that particular candle? So I will mark this entire range, and with a 75% accuracy, I can say that this is the place where institutions executed their first leg of the orders. Is that clear? I mark the body of the last red candle and extend this area. For me, this is where the institutions have started buying their shares, and all their remaining orders will be pending in this area. Now, I don't know whether the price will come here and then move up, or come here a little deeper, come here a little deeper, and then move up. My objective is as soon as the price taps inside or at my order block, I have to go long on that particular stock. Is that okay? Yes or no? Is this part clear? The body of the last red candle before the big displacement. So you will be able to identify A when B has already happened. Is this clear? B हो जाने के बाद आपको A दिखेगा. And you are not a part of this move. You are not buying at A and selling at B. You are just waiting for A, B to happen. How many of you are agreed on this? You are not buying at A and selling at B. Okay? You are waiting for B to happen, and then the second move is where we will be a part of. Okay, I will come to all your questions now. Why are we waiting for the price to come to A? Is because this is where institutions have their pending orders in the market, and these pending orders will act like a price magnet. So just understand this, right? Let's say you have to sell a house at 1 crore rupees, right? You just want to sell this property at 1 crore rupees, and there is one seller who's sitting at 85 lakh rupees, right? So let's say you want to sell your house at 1 crore, and 85 lakhs is where the buyer is willing to buy. Now you're finding the market, you're not finding a seller for 1 crore, you're not finding a seller for 90 lakh, you're not finding a seller for 95 lakhs. So what is your option? What will be your option if you have no buyer buying it at any other price but 85 lakhs? Will you have no option but to execute this deal at 85 lakhs? Can I say, if there is no buyer willing to buy from you, you have no other option but to execute this deal at 85 lakhs? So can I say the price will move to where the buyers are? If you are a seller, you will have to move and align with where the buyers are present. So similarly, the price will come back to the area where buyers exist like a magnet. So this is exactly what's happening. The price comes here and it taps into this area, which is your point C, right? Now, in this order block setup, I want the price to come to the order block while the volumes are declining. This is very important. And this is specifically for stocks. For index, there are different rules. I will come to that. But I want the price to come from B to C with declining volume, because this tells me that institutions who made the price go from A to B are still involved. How many of you are with me with the logic? I want the volumes to be declining in nature. That's like a priority for me, right? Now, as soon as the price arrives here, I know one thing for a fact, that if institutions created this move from A to B, they are definitely going to buy again. So my execution will happen as soon as the price comes in here. My stop loss order will be right below the order block, slightly below the order block, and my target will be at a place where all other donkeys will enter and buy. So where will other retail traders come and buy? Above the next breakout, which will probably happen here. Do you agree? This is the next, this is basically the next breakout area that's going to take place. So I will keep my target order right here, because I know that is where a lot of buyers will come into the market and I will get a lot of liquidity to sell. Does it make sense? That where a lot of buyers are coming in, they will wait to buy, and I will sell where they are executing their buy order, right? So now this thing happens, the price moves higher, and then you can see that there is a reason why the price gets rejected exactly precisely at this area. How many of you are understanding this? Can I have a yes? The price gets rejected or wicks out precisely at this area. To this, how do you identify C? I told you, right? When you are sitting at B, just identify the body of the last red candle which created this up move. That's how you get C. So this entire thing is C. As soon as the price comes here, you have to execute your trade. Understood? Now, important observation. This was your big candle in A to B ka displacement, and then this C to D ka move. Can I say this is your big candle? Do you all agree? Just focus on two things, okay? Can I say this candle and this candle is like the starting point of the displacement? Like this is where the displacement actually starts. The candles before them, this one and this one, look at the corresponding volumes. Can you notice and observe something? The candles right before those big candles, can you see the volumes? Literally dead, dead or vanished volumes, right? Now, let's move forward. Let's move forward and let's understand what is going to happen here. So now tell me one thing, right? A lot of retail traders are here. So what do you think a retail trader is going to do here? Any idea? What is a retail trader going to do here? When this happens, now what will a retail trader do? Can you tell me? What is a retail trader going to do here? Now, can you tell me what will a retail trader do? Buy किया तो stop loss hit. अब बताओ क्या करोगे? Sell करोगे? When every retail trader thinks it's a good time to sell, do you think someone is waiting to do something opposite? Can I say when you're invited to sell and it's an obvious sell area, do you think something big is about to happen? Understood? Now tell me, can you not identify displacement? Is it the break of the previous high? You please do it alongside me. Is it the break of the previous high? Yes, breaking previous high. Is this a displacement? I want everyone to be with me. Is this a displacement? I'll tell you how to do it in Nifty Bank Nifty, Baba. Wait. Is this a displacement? Can I mark my order block, please? Is this the body of the last red candle before the big displacement? Can I mark this area as my order block? Can I mark this area as my order block? Can I wait for the price to come here? And when the price comes here, can I execute my buy trade? Can I wait for the price to come here? Okay. Did the price come here? No. I'll just wait. I'll have to wait. Absolutely, yes. I wait for the price to come here. The price arrives at the order block with a volume dry up, yes or no? Correct? Do you think my system is telling me to buy? Sejal, you're not able to understand this order block? Simple stuff, right? At this point, when you reach this point W, I'm just randomly naming it, your body of the last red candle which created the displacement, you have this order block now, right? You wait for the price to come here. So when you are here, just set an alert. At this point, you will set an alert and you will only look at this stock when the price comes into the order block. How many of you are understanding this? You will not wait for 10 days staring at the screen. When will the price come to the order block? You will analyze hundreds of stock together, set up your alert that, okay, this is the time where I want to be involved in the stock, right? Let's say fast forward, this is the time when the price comes to my order block, right? So price comes here. Now, do I have the license to enter? Give me a yes or a no affirmation, please, everybody. The price comes here. I told you, as soon as the price arrives in, just take your entry. Stop loss here. Target will be above the area where Chintu Pintus will buy, right? So this is my target and this is how things work. And volume dry up is there. And are you surprised to see the magic? You have exited at the area of the biggest volume. And now observe two things. Right before this big candle, can you see the volume of this preceding candle? Yes or no? Give me a yes if you have observed this. Right before this big candle, look at the volume of the preceding candle. Right before this big candle, look at the volume of the preceding candle. Now I hope you are understanding why a lot of things that you knew about volume is absolutely false and incorrect. Right? No, Mayank, this is not going to happen. So I'll tell you one thing, right? You have to understand, right? What is the most crowded market? I'll do it in Nifty and Bank Nifty for you, right? Nifty and Bank Nifty, I'll tell you. So someone just mentioned, right, operator driven. I'll tell you where can operators operate? Who are operators, right? Institutions, right? Institutions cannot operate a stock if they don't have enough volume. Which are the two instruments which have the highest liquidity and volume in the market? Give me an answer. Vikas Gupta, I'm showing you. I'm showing you. Give me a minute. Which are the two instruments where you have the highest level of liquidity, Nifty and Bank Nifty? Where are the maximum level of fake outs happening? You tell me, maximum level of fake outs happen in Nifty, Bank Nifty, or do they happen in stocks? Be smart. Nifty and Bank Nifty is traded by over 1 crore people every day. Is it crowded? Is it competitive? Yes or no? Be smart. Nifty and Bank Nifty is traded by every algorithm which is there in India. Every domestic institution, family office, large institution, bank, everyone is trading Nifty and Bank Nifty. That means more algorithms, more complications, more fake outs, more institutions waiting to manipulate the market. So, what is easier to trade, stocks or Nifty, Bank Nifty? First, tell that to me. Statistically speaking, stocks are going to give you much better returns adjusted for risk. Number one. Number two, you can apply the same in Nifty, Bank Nifty. I will show it to you, but you'll have to be patient until when your setup arrives. Fair enough? I will show it to you in Nifty, Bank Nifty. I've got 30 minutes with me. Don't worry, I will cover everything. I've got the last 30 minutes with me. I'll show it to you on how it works in Nifty Bank Nifty. I'll show it to you on how it works in gold, silver. I will show you how to select stocks. But you have to allow me the time to do all of that stuff. Okay? Is that clear enough? I'll just show you one more example very, very quickly, and then I'll move to Nifty Bank Nifty, and then I will move to 2 or 3 examples of trades that I've executed live based on this, and then we will start the other thing, because I had another strategy in which I wanted to cover, but it surprisingly took me 2 hours to just explain this. So maybe I'll not be able to do the second strategy, but I will just give you a brief on that because it's very similar to the first one, right? Can we automate? Okay, I'll tell you towards the end how can you automate all of this, right? So now first things first, right? So okay, this is a stock, okay, blah blah blah, and the stock has a displacement. So I've just already marked it in GRSE, very good case study. So can you please tell me, is this a displacement? Let's be very, very quick. Is this a displacement? High volume activity, big candle breaking the previous high, right? So if you want to remove this, you can just mark this as your previous high, and that also works, right? So how many of you are accepting this is a displacement? Can I have a yes in the chat, please? Right? Displacement ho gaya, theek hai. The body of the last red candle. This is the body of the last red body candle, right? Before the big displacement. So is the orange box my order block? Yes. Can I have quick yeses? This is my order block. Perfect. Now I'll wait for the price to arrive here. Let the price come here. When the price arrives over here, I will tell you what others are thinking. Others are going to literally do this. Do you agree? Do you agree? This is the biggest large body red candle. Na? This is not a full body red candle. I prefer full body red candles, right? You can mark this also. You can mark this also if you want to. Doesn't matter. You can mark this also, but I am looking for large body red candles. Now, again, everyone's looking to sell, but obviously we're not interested. Second thing, is the price coming to the order block with the volume dry up? I want quick answers. I've already done all of this with you. Is the price coming down with a volume dry up? Very, very good, right? I think everyone's smart here. Number three, another observation that I wanted you to make. Can you see this big candle? The candle preceding this, is it having the same characteristics as communicated earlier? Think and give me an answer. It's getting really interesting now. Right? Now, should I take an entry? Because the price has, my conditions are fulfilled. Can I take an entry here? The way it is marked, stop loss below this, target above this. Let's see what happens next. Boom, 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 boom. And it's not over yet. This is what happened from that little area. Now, do you understand institutions are not for intraday trading? Holy moly. Exactly. So now what I'm trying to tell you is, was this a coincidence all this is happening, or do you think institutions have a staggered way of executing their orders? You will not be able to capture the entire move. Not at all. You will exit here. You will never be able to capture that. Let's be very honest. How many of you agree with me? You are never going to be able to capture the entire move till the top. Not at all. Right? Even if you capture this, yeah, you're making a lot of money. Even if you capture this 1:4.5 hour, जो आपका actual target है, you're making shit ton of money, boss. You don't need anything else, right? So the point is, again, if I tell you, this was the big candle now, right? Can you see this? This was the big candle. इसके नीचे का volume देखो. Is it the same thing again? Is it the same thing again? I showed you इस candle के साथ. Now I'm showing you this candle के साथ. Again, the same thing, right? One last example if you want to hear, which is a little tricky one. So now how many of you are able to see exactly what I am seeing in this particular chart? Like, are you all able to see that? Yes or no? Are you able to see this? So the price comes here. The price comes here. You want to execute your long position right here. Your stop losses will be below this thing and your targets will be here. For the next 2-3 days, the price comes, oh, the price is very close to the stop loss. The volume is dried up. अरे बाबा ये रहा ना volume spike, ये मेरा displacement हो गया. My entry is here. Now for the next 4 or 5 days, the price is not moving in my direction. But has it hit my stop loss? Has it triggered my stop loss? That's my question to you, ladies and gentlemen. Has it triggered my stop loss? I have no reason to exit. This is where majority of the traders use their brain and exit here. अरे अब इतना आगे अब तो ऐसे ही हिट होगा, निकल जाते हैं. How many of you agree? A lot of people make this mistake that no, it's so close to the stop loss. So now let's just exit. You know, why to take this much risk also? What happens next is history. I know you don't have to exit, but what I'm trying to tell you is it again a coincidence that this area led the stock to move up like by how much? And again, you're not going to capture the entire move. Even if you capture this, you're going to make a lot of money. How many of you are understanding the game? And just look at how volume dry up, how what a crucial role volume dry up has always played. Right now, I'll do a practical example. I'll show you a live execution, which will make things easy for you. And then I will show it to you in Nifty Bank Nifty, right? Fair enough. I can show you Britannia, I can show you gold. I'm just showing you like the easiest examples so that it's very easy for you to kind of mark everything, right? So fair enough. So now you see this is Britannia's chart. And now I think you all are able to see this is a breakout. Everyone tries to enter here. PH is previous high. Now, how many of you are able to identify the order block at B? Can I have a yes? Are you able to identify the order block at B? Right now we wait for the price to come to B. The price does come to B at this point, and we execute a trade which helps us exit over here, right? So we enter here and we wait for the price to move higher. Now let's look at this case study. So what is the date that you can see on your screen when the first green candle came back over here? 22nd of April, right? 22nd April 2024, right? So I'll just go to the same date and I'll show you this particular trade as a case study so that you can understand how this works. So I'll just scroll up and I'll just go to the date, right? So I'll just go up over here and I'll go to in positional trades, and just give me a minute and I'll go to the date, right? So I'll just go to the date during 22nd of April. So I'll just go jump to the date. There it is, Britannia and Tata Technologies. Two case studies right in front of you. I'll just click on jump. Screen is not visible. Okay, so sorry. My bad. So I'll just do this again, right? So I just went into positional calls and I set the date. Is the screen visible now? So I'm on to my server. You are now on 22nd of April 2024. And I've shown you Britannia, right? So I have a system where I can search on any specific date, what trade did I take? So I'm trying to show that to you. So we went long on Britannia on 22nd of April, 10 a.m. That's what exactly we did. And we also took a similar trade in Tata Technologies. Now, how many of you can identify the Tata Technologies trade also? Like two trades simultaneously, I can explain. Right now, just because I'm here, I will show you recent ones also, but right now, both of them are in front of me. So I'm just explaining that, right? So now you will see this is Britannia. We took that. This is Tata Technologies. How many of you are able to identify this? Perfect, right? Now, Britannia moving higher. We took a futures trade in Britannia. Britannia moving up for 3 consecutive days. Now, next day, Tata. So this is Britannia going up 2 consecutive days. Tata Technologies, I just showed you, right? Now you are understanding why Tata Technologies was up 3.5% the next day. How many of you have understood this? Yes or no? Tata Tech, I hope you've understood. Very simple, clean order block play, right? It's just that we had to identify that Tata Technologies were the right place. Now, Britannia for the next consecutive 3 days, just moving high, really, really nicely. And then finally, we are booking profits in Britannia on 6th of May, where we have the biggest volume with the biggest candle, and we are booking a 1:5 risk reward ratio. Now you are understanding how to exit when the volume is manufactured in the chart. Yes or no? Can I have a yes, please? This practical example kind of displayed that that's exactly how you execute. Now I can show you hundreds of examples, but I don't have enough time, but I'll still try to show you as many examples as possible, right? It works at on every time frame. I will show you specific rules for every time frame, right? This is what I have showed you over here. Now someone wanted Nifty, Bank Nifty में कैसे होता है? Okay, चलो Nifty में लेके जाते हैं आपको, and I'll show you how this is done in Nifty on a 5-minute time frame. Fair enough? Is it fair enough? Nifty 5-minute or let's say 15-minute कर लो, चलो 15-minute time frame. Let's quickly take 1 or 2 examples in Nifty. Now how many of you are able to identify that okay, this is a displacement? Can you quickly tell me? How many of you can say this is a displacement? Yes or no? Don't worry, I have technology that can automate all of this for you. So just stick around. I will tell you how you can do it. For everyone who's asking me how to find stocks, how to do this, how to do that, just give me 10 minutes more, right? Now tell me one thing. This is a displacement, right? What's the last red, large red body candle before the up move? Can I call this an order block? Give me a yes or a no answer. This is the volume, right? Although the volume is declining, but on index, I don't look at the volume. On when if I'm trading index, if I'm trading gold, silver, I don't look at the volume. Like when I'm literally trading the index, the volume is gone. Why? Because index trading happens with different contracts. Number one. And number two, index may volume plays a very little role. It plays a lot of role in this. Yeah, see, you can take this red candle also. Like if you want to just take this red candle, you can take that. But since it is not a large body red candle, I can take both of them. This is again my matter of choice, right? Okay, correct? Perfect. All right. Now let's go. Let's see what happens when the price arrived here and what happened when the price moved higher. So I hope you've understood why the price came here only to take orders to move higher. Yes, no? This is a 15-minute chart, right? This is not for swing or positional. Like you can literally do BTSTs with this. You can, okay, I'll give you if you want a very good example, I can give you like a very recent one in Paytm, and then I'll show it to you in Bank Nifty, right? So this is Paytm, and I'll show you one very simple thing. So now just look at this, right? How many of you can see a displacement? Price comes here, that's your order block. Price comes here and does this. How many of you are understanding this trade in Paytm? I hope I don't have to go around and show like every single execution of this, but I hope you're getting a good idea on how this has been, worked out. Yes or no? Okay. Volumes. Okay. You can look at the volumes. There it is. So now in this particular case, you don't primarily have a lot of volumes, but if you look at this example, you'll see big volume spike and the price coming in here. Can you show? Okay, so I'll show you Tesla international stock. I hope that's fine. How many of you can identify this order block? Can I have a quick yes? Can I have a quick yes if you can identify this order block? Price comes here. What has Tesla done? So does it work across markets? Yes or no? Does it work across international markets also? Simple enough, right? And same happens in Bank Nifty, same happens everywhere, right? So I can show you like, okay, so I'll show you one or two more examples. Let me show them to you. Okay, let me show you one or two live examples of where we have executed them, and then you'll probably get your answers, right? So let me go here and Pratap snacks. Okay, so let me see if I can show you examples. Okay, so meanwhile I'll just try to show you the other setup, right? And then I'll have to cover stock selection also. It works in Bitcoin, it works in Bank Nifty, it works everywhere, right? So let me explain the squeeze setup as well to you, right, on how that works, right? So right now we have completed the order block setup. So there are simple rules. Wait for a displacement. Once a displacement happens, wait for the body of the last red candle before the displacement, which is your order block. Wait for the price to arrive over here. As soon as the price arrives, enter here, stop loss here, target above the last high. Is this part clear to everybody? I will take a full Q&A towards the end. Let me just brief everything to you. Okay? First, this is what you did. Now my question is, and volumes have to dry up if you are trading stocks. Correct? Now, what if the price never comes back down? Does it happen that the price never comes back down? The price just moves up from here. For example, this is the order block for this stock. But I know that the price will never probably come back up here, and it is going to expand from here. So let's try to help you understand the squeeze setup, where all we are doing is we are trying to identify the volatility contraction with a volume dry up at a different location. So yes, all the other things remain the same. Yes, we are looking for a displacement. Yes, I'm looking for a displacement. I'm waiting for the first pullback, and then I'm waiting for price to contract in a tight base formation, which is called the launch pad. And all of this has to happen while the volumes are dried up, where I'll take the entry at the launch pad, place the stop loss, and place the target 3 times of my entry. Right. So this is a trade which is taken on 3rd of October, which is Thursday, on Sakti Sugar. Now, how many of you are aware sugar stocks have been doing really great these days? Yes or no? Tea stocks, sugar stocks, they've done extremely well. So we identified Shakti Sugar, and as soon as we entered, so this is our tech platform, which kind of shows you the stock already started moving, from our entry price, and it was up 9% within minutes of us buying. 2:44 p.m. Is where we bought Shakti Sugars, and that is exactly what can happen. So again, what I'm trying to tell you is within a matter of a few minutes, 9% up, a stock going up 9%. I think the previous day we took it at 3 o'clock, and I think the next day, October 4th, sorry, October 4th is where, within a matter of one day, stock was up 8-9%. Very, very, critical, update. One more example I'll show you from recent trades, which will give you like the idea on how this particular setup is being played out, right? So I can show you Oberoi Realty. Okay, this is a different setup. So okay, I'll try to show that also to you, but let me first complete this. So now You're not able to see the entire chart right now of Oberoi Realty, but you will basically see one thing, that is, when I'll show you the chart, there was a displacement here, first pullback, and then the basing, which is the launch pad that was being created. Another reason was, you can probably read it from here. uh, can you see that so this is our AI application, which basically we use to track news catalysts, right? So you can see all the real estate companies, DB Realty, Rustam G, Ajmera, Oberoi, Godrej Properties, they were all trading higher because of Maharashtra government considering to reduce stamp duty on property registration. So we got the update, and accordingly we took a position in Oberoi Realty, because we knew that interest rate cuts are good for real estate companies. So there were fundamentals also assigned with that, and that's where we took the trade in Oberoi Realty, and it gave us pretty good results as well. Right now, I'll give you one very clean, crisp example. I think Syngene is one. I'll tell you this, and I think LIC Housing is a double example. Right? How many of you can identify like a 5 minute, 15-minute order block in LIC? Can I have a yes? Can you identify a 15-minute order block in LIC? Can I have a yes, please? Although and you can just see volume dry up. So again, that's excerpt from this. I'll move up. I will show you one more play, which is going to be, just give me a minute. Let me scroll up. There are multiple other strategies that we are playing out with. The two that we have discussed today, I'm trying to showcase the returns and the results from that, right? So this is Kukoyo, Camlin, Manyavar. All of these are also great. Okay, Swaraj Engines. I think this is the one, right? Perfect. So I'll go to Swaraj Engines. And now tell me one thing. Are you able to identify the displacement? Can I have a yes in the chat? Janya, I'm moving from bottom to top, right? So the most latest trades to the most recent trades. So wherever I will see that, there was a cost to cost or a stop loss trade, I will stop there, right? Now, I hope all of you can understand this is the displacement, this is the first pullback, and this is the launch pad. So now essentially what you're looking at, this is the displacement. Let the price pull back. While this is happening, you need to see the volume dry up, and then let the price come back near the highs, and then just create a rectangular tight base. It's basically just tightening over here. And this is the moving average. This is a 20-period moving average, right? Now, when you see all of that, can you spot volume dry up? Can you spot the base build up to be complete? So I'm taking an entry with the stop loss here and target 3 times. Absolutely, yes, iPhone. I don't know what your name is, right? So now, when this happens, we are going long on Swaraj Engines at 31.30, 29.60 is the stop loss. And the very next day, Swaraj Engines up 6.5%, right? 7.5%, 9%, and that is where we basically get out of the trade. So you're again exiting the trade when the volumes are the highest. How many of you are understanding that volume plays such a critical role? Yes or no? Can I have a yes or no from you guys? Okay, I'll show you a couple of more trades. Now, for the last 2 days, I showed you my PNL also, right? There were some stop losses that were triggered. So again, for example, ABB India, this trade failed, but it did not hit the stop loss. We were out much before the stop loss basically got triggered. Indo Amines also, we took the trade, the stock moved higher, but then we had to exit, not at the stop loss, but over here. And we had a catalyst for ABB India as well. Now, just look at Tega Industries, right? So just look at this. How many of you can see this, right? So there's the first leg of displacement, pullback, this volume dry up. Can you identify this? Can I have a yes? Can I have a yes? So Tega, we get in over here, and now your minds are going to blow. And this is 1st of October. This is, I'll just hover 1st of October. And now look at what happened. Isn't it insane? Can I have a yes in the chat? Just look at this, right? This is just a crazy little move, and that's the reason I tell you that stocks is where all the money is, right? So if you you can see right now metal stocks have been doing well, right? So you can clearly read. So this is the AI tool. I'll show you how you can get access to this, right? So it basically tells you at Bloomberg speed that which sector, which stocks are currently buzzing. So this tells you that Jindal Steel and Power shares are trading higher along with other metal stocks on optimism after the People's Bank of China trimmed the reserve requirement by 50 basis point to boost the economy. And China's measures are basically the reason why metal stocks are moving higher, right? So again, that's the reason. And then there were a lot of textile stocks that were in our portfolio that were doing really great. So again, there are lots of things buzzing that keep happening, but more or less primarily the idea is that, like, for example, trades fail like this also. Like, we entered the trade over here at the volume dry up, so you can see this is a displacement. If you understand this structure, right, the volume dry up, we entered here, and then the stock started kind of reversing, so we had to get out. So again, that also happens at a lot of tentative places. So again, that's a part of the system that you have to continuously track. But you probably get the idea of what we're talking about. Now look at Epigral, right? This is the last example that I'm going to do, and then I'll move to stock selection. So this is Epigral, right? This is again a very recent trade. 24th September we took a trade in Epigral, and this is like a proper breakout trade that we took, but with a catalyst, right? As I said, our application gave us the catalyst. And now Epigral, this is where we exited the trade. This is almost an intraday trade. 15 to 20 minutes is what we took to execute this entire trade. And this is where the application told, right, Arihant Capital, there was an investment banker who was buying the stocks of this stock, so we were able to take advantage of that. Similarly, you look at this, right? So this is Sapphire Foods India. How many of you can see the volume dry up? Can I have a yes? So how many of you can see like a picture perfect volume dry up setup being originated? We keep this on radar, and then it starts moving 2.5% up, and then this is the candle that everyone needs, 7.5%. Yes, we did buy Tega, right? So, and like this, so on and so forth, you can find multiple examples, and I can keep showing you like a lot of examples that move. This is Home First Finance. I think this is also very interesting. I don't really see a problem, right? How many of you are able to identify the entry? Can I have a yes? I have already explained all of this to you. You can execute this in any time frame, right? I hope you can identify the order block. I hope. How many of you have understood volume drive is a big game? How many of you have understood this, that volume dry up is a very, 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 very big game, right? Prithvi, you will see that post the webinar. We'll show that to you. You'll see that there. So essentially put, right, there are multiple instances where you will, constantly see that volume dry up is, a big thing. And, that kind of consistency you can maintain. Now, for example, catalysts also help you like this. So, for example, we went long on Indigo, right? Again, this is a setup where the price came out of a consolidation. This is called like a box setup, right? How many of you heard about the box setup? Basically, the price was coming out of a consolidation and we entered here. But the reason to enter here was a little different. We got an update from the app that there is something happening in Indigo, right? So Indigo shares were trading higher because Jeffries, investment bank, they were creating positions in Indigo. So when we knew that, we created a position on Indigo, and we were, you can see the timestamp, 3:12 p.m. Almost at the end of the day, we went long on Indigo. And the next day, Indigo was up about, I think this is the PNL, and Indigo was up 4.6%. That's the move we got. So you have to understand that these catalysts also help you in understanding all of these details, right? So now I'll just switch off my camera so that you can see the entire screen properly, and I will run you through over all the trades that we have taken in the last few days so that you have a great idea on how you can execute these strategies in today's conditions. So I'll just take over, yesterday's example. So this is Anand Rathi, this is Prism Johnson. So I think you can clearly see the order block in Prism Johnson. I think this is what we discussed. There was a volume dry up. Now this is the body of the last red candle before the big displacements. I hope all of you are able to identify this. Can I have a yes if you're able to identify this? All right, perfect. Now, this is Anand Rathi. Now, this is another big base setup. So I also told you, right, that sometimes the stock may never come back to the order block, but now you've got some big volume activities. Now, in this particular case, you can't really see a picture perfect volume dryer, but what you can see is that the stock is just trying to contract near the highs, and this is the launch pad that you were referring to. So we went long on Anand Rathi. At the time, Anand Rathi was up 2.5%, and as soon as we went long on Anand Rathi, I think within a few minutes it was up 6.5%. So this is one example on how things can really shoot up as soon as you take the entry. Prism Johnson is something that we are still long on. And now I'll also give you a few examples of short positions also taken from the same setup and some long positions. So the first example that I want to give you, I think I can take this example of 5 star bus finance, right? So this is 5 star. Now you can clearly see this is the volume dry up. Now this particular trade, okay, what date was this taken? So 11:22 a.m. on October the 14th. So you can see long 5 star. This is the stop loss. This is the entry. This is a swing trade. And you can see that this is the launch pad that we are targeting with the volume dry up. So as soon as we took the entry in 5 star bus finance, we also took an entry in Infosys. And this is what happened in 5 star. It just started moving. It was up 6%. And this is how things can really shoot up. So after a volume dry up, this is the volume expansion. How many of you are understanding this? Can I have a yes, please? Big volume expansion with literally one directional move. And this is the snippet of our application. Stock was up 8.5%, and it was almost near the target. And we were up about 10% in about a day or two. So that's the power of a volume dry up trading. Now, another example that I would like to give you, I think would be Azad Engineering. So this is again a trade taken on 8th of October. And we also took a trade in LTIM Mindtree. So this is the news catalyst that came in. LTIM launched its new comprehensive digital transformation system, which is a good catalyst. So we took a trade in LTIM. So that's the trade in LTIM over here. You can see that the volume was drying up. The stock was creating a base. That was the launch pad for this particular stock. So LTIM one trade. The other trade is Azad Engineering. Now Azad also, you can clearly understand this was an area of demand, a previous area of order block. I hope all of you can identify that. And once we took both of these positions, let's see what happened next. And Azad Engineering was moving very, very swiftly. This is LTI Mindtree, sorry. So this moved really nicely, and this is Azad Engineering. Both of them moved really nicely. And CMS Infosystem also, same setup. If you can figure out, this is a volume dry up, this is a base, this is the launch pad. So I hope all of you can understand that all of these setups are more or less very, very similar. You just need to identify the best ones properly. This is Azad Engineer, LTI Mindtree, sorry, where we booked 1.5 hour because Nifty started going down. So we didn't really wait for the final target. And there was another, stock called Awesome Enterprise Limited. So you can really see that the day from where we added this into our watch list, which is 2nd of October, stock was up 42%. So that's the power of institutional trading. And we were always keeping a lot of stocks on radar. This is another order block trade, Crest Ventures on radar. And this was one stock where the stop loss was triggered, and it happens when the markets are weak. And Azad Engineering, you can see this is the continuation of the trade. And we locked in gains. 10% move in Azad Engineering was caught. So I hope all of you were able to understand how these recent trades were really played out. So now the markets have been falling for the last 2 or 3 days, and especially for the entire month. So you also need to know how to execute the same strategy on the short side. So I'll just go to intraday trade setups, and I will just start off with Coal India. So this is taken on 22nd of October, which is a Tuesday. So let's have a look at this. So now, first of all, this is an inverted chart. So I hope all of you know what an inverted chart is. So usually the chart is, this chart is basically flipped upside down. That means all the red candles that you are seeing, it's actually going up, and the green candles are actually going down. The reason why we do this, because I can see a lot of people in the chat asking, why will you do this? It's basically because when I taught you all the structures, let's say the order block structure, or what if I talk about the launchpad setup, both of them are designed to trade while the markets are going up. But now if you want to use it on the short side, what we do is we invert the chart upside down. So that's what we've done. So now over here, if you see what the stock is doing, Coal India, this is on the 15-minute time frame, and Coal India was basically just creating that little launch pad over here. And now for all of you who are having the question on how the launch pad is formed, so launch pad can be formed at the top of the base, or launch pads can even be formed above the base. So both of them can be considered as launch pads. So we took a trade in Coal India, and after the trade in Coal India, there was also a trade on Tata Power. So this is short in Tata Power, and another trade in LIC Housing Finance. And again, LIC Housing Finance, you can clearly see that this is the launch pad where we were trying to execute the trade. So in all of these three situations, we were trying to go short, and this is basically Coal India, which is moving in. You can see the volume kicking in, and there is, I'll just give you an update. So this is Coal India breaking down very, very smoothly, and you can also apply like a 10 period exponential moving average to kind of trail this one, and LIC Housing Finance was also moving down very, very smoothly. And this is where LIC Housing Finance was booked. So it was a 1:1.5 risk reward trade, and Coal India was a 1:2 risk reward trade. And again, what you can see is that the volume dry up was constantly happening, and then suddenly there was an increase in volume. So long story short, what the idea is very, very simple. No matter what style of or what kind of the market it is, if you want, you can execute this on the short side as well. So this is Tata Power. I showed you Tata Power as well. This also broke down very, very smoothly. And over here, you can see in this consolidation period, the volumes were drying up, and then the volumes kind of expanded. So can I have a yes if all of you have understood the short side of the trade as well? So for those of you who want to know what in how to invert charts, you can just press Control Shift I on Trading View, and it will just basically invert your chart upside down. So that's basically how inverted chart works. So this is like an inverted chart, and Tata Power is a normal chart. So normal chart, the price goes down, and you can see red candles going down. And if you want to compare it with the Coal India chart, so essentially the price is going up, but the red candles are basically depicting the price movement on the upside. But and this is 478, this is 466. So the price is going down, not up, but it's just the way to perceive and look at the markets. So I hope this is fine. So now I will get my camera back up. So allow me a minute, and then let's get started again. Now, the question is, how do you identify this, and what are the key important things that you have to note down? So for the second setup, you can just take a screenshot of this if you want to. For the schematic, I will give you the schematic for the first stage. So can you take a screenshot if you want? Yes or no? This is basically what we're looking at. Okay, yes or no? Once you're done, just write a yes. Okay, that's the schematic for the first one. For the second setup, now someone saying, why to trade this? You can do this in Nifty Bank Nifty. So see, I'll tell you one thing very honestly, right? So you can do anything in Nifty Bank Nifty, right? Anything can happen. My point is, if it is not making money consistently for you, does it make any sense for us to constantly do this? The thing is, a lot of people are unable to work around when it comes to executions of options, right? So I'll just try to show you what numbers can you look to achieve when you are essentially doing consistent level equity trading primarily from order blocks. So I'll just constantly show you. So again, depending on whether it's a newbie trader, or whether it's a trader who is there are people who are trading stocks which are literally giving 300 percent plus. There are people who do option selling also. There are people who do option buying also with the same level of things. But I want to show you something different, right? So you will always see that people who are people like you who've learned order blocks, they and with our AI tools. So what they're able to do is they're able to consistently extract returns, and you'll always see, right, the numbers that I told you in the starting. Your PNL ka 10% should be your brokerage and charges. And if you have that, you are efficiently trading, right? You look at this particular person, look at the charges, look at the brokerage. How many of you are seeing standardization here? Because it's a system, it's a systematic trade. How many of you are able to see charges, brokerage very low as a percentage of the overall PNL? And you will see this almost everywhere, right? Like every single place that I will show you, you will always probably and perhaps you will see that. So I'll just scroll up and show you how equity trading is much larger than this. Now look at this, right? This person joined in about May and started using with order block techniques. June is where he started. July was choppy for him, but then August and September, just look at this. So the winners are very big, the losers are very small. And even if you look at his trader's diary, you look at the risk reward, which is just crazy, right? So this is what I need to, I'm giving you motivation that you can make a lot of money. This is the result of what he has been able to do in the ongoing month. So that's also crazy, right? So now this is a trader who's currently into a drawdown, just recently joined. So now he's also trying to transition out his journey. Now, if you look at all other, traders who are constantly just using the same techniques, you will see majority of their gains are coming in from, the stocks that they are trading. And that's like the safest bet. Now, why is that? You have to understand that if you understand options and derivatives really well, how many of you know there is delta, vega, theta, gamma, rho, and like 10 other factors which are not in your control. But in equity trading, you will always, so there are people who do option selling also. I'm just primarily trying to show you equity. So this is sequent scientific. Look at the number of returns. Look at this trader's consistency purely in equity, purely in equity, right? Only equity trades, May, June, July, August. You look at this guy again, small steps people are taking, but they are executing the trades really, really well. And again, over here also you will see, and you'll constantly see one thing: people are consistently profitable. Like, look at this. Will you ever see this in a options traders PNL? No. So again, my objective is, if you want to achieve this kind of consistency, you can use order blocks, you can use the setup that I have told you, but again, you'll have to put in some research and this level of consistency. So Indigo, I just told you, right, the trade we took together, people do trade it in futures also, and majority of the traders are usually trading. So you can look at this, people do trade FNO also with this, but it completely depends on their risk appetite and what they're looking to do. So just look at this, right? This is the real impact of profitable trading. How many of you agree? And how many of you are okay that you are going to try equity and just remove the fuss about all this nifty bank nifty, if you really want to make money, right? If you want to just do everything that others are doing, so you can yeah, look at this, right? So just look at these numbers. These are just exceptional numbers. And I'm just showing this to you so that this is Jyoti Laboratories, right? So this guy's first trade. So he bought 1,000 shares of Jyoti Laboratories at like 502 and then sold about 800 at 518, which is crazy, like 12-14,000 bucks. First trade ever. Over here, look at the risk reward, even if you take nifty bank nifty trades. And that's how basically you will see like almost every trader. I'm just showing this to you so that you know that it is possible and you can achieve these kind of numbers. So I showed you Sapphire Foods, right? The example recently, this is the Sapphire Food trades. So again, what I'm trying to tell you is that just try to execute like this, you will see results like this. And I'm just trying to show you on and on and on, just so that you are not going in the wrong direction. So I hope all of this kind of resonates with you. And if you want to achieve these kind of consistent results, you are already knowing order blocks, and trust me, you will spend 50-60,000 rupees on courses which will ultimately teach you the same order block strategy that I've taught you. Yes, you need practice, and if you want to get to these level of returns, you need the best uh, technology and the tools, which is where we help. And once you have those tools, once you have the right technology, once you have the right stock selection techniques, that is where you can start extracting these kind of results. So again, even doctors which are trading passively, right? This is very, very important for people who are passive traders. Doctors who are passively trading are also able to generate these kind of consistent returns. And FNO traders, I know what they have been able to do. So I'm just trying to tell this to you, that if passive traders like this doctor, and there are like 3-4 other doctors who are consistently generating these kind of returns every single month, you definitely can, right? We are SEBI registered, we don't deal in forex, so sorry about that, but we are, the strategy works in forex completely, it works in crypto. Since we are SEBI registered, National Stock Exchange registered, we don't deal usually in things, right? So another doctor here, and you will constantly see like people coming in, going in, and you will just see this consistency. So I hope all of this is really, really clear. So how many of you are confident with the system? Can I have a yes before I do the last part, which is stock selection? I hope all of you have got enough evidence of how strong the system is, and you can definitely, understand. This is not a joke, right? Everyone who's able to achieve all of this, it is just something that you can really, really achieve. All right, next. Now let's move. So you've looked at almost everything. So now let's move to stock selection. Let's move to that part of the equation. So now how do you do stock selection? So it's very pretty simple, right? So all you need to do is, I'm going to give you these lists, right? So I hope you can see my trading view screen. So I'll tell you how to join Discord. So this is a place where we trade live with about 12,000 members every single day. So I'll tell you how to become part of this. So now we are going to give you this list. I hope you can see the screen. So these are segregated lists based on sectors, which I will give you. So all stocks part 1, part 2, part 3. So all of this is something that I'm going to be giving you. You will have to import that and you will have to manually screen stocks. Now, why do you have to manually screen stocks? It's because of a simple thing. All the screeners and scanners are going to tell you these stocks are going to move after they have already moved. How many of you agree? All the screeners, scanners will tell you these stocks have moved after they have moved. So screeners and scanners are always lagging because they track price. Mera to objective hai to enter before the breakout happens. So my majority of the part will go into stock selection. So now for stock selection, obviously you need technology, which is where we help. And I'll tell you how we can do that. But if you don't want to do all of that, you have to manually scan through these stocks and do that on the 1 day time frame. On the 1 day time frame, the efficacy is good. Now you tell me, do you want to randomly do intraday trading when you can generate the same returns at the end of the month by buying a stock and selling after 2 days? Do you want to do intraday trading just for the heck of it? No, it doesn't make sense, right? So well, you know what we do is we focus on the daily time frame. We have more control over the stock, we have better accuracy, we have lesser stress, we don't look at the screen 24/7, right? So that is how we execute the trades, and you have to do it all of that in the 1 day time frame and identify these two setups and structures. That's how you do stock selection. All of these three lists, so I'll just show you the list. All stocks part 1, part 2, part 3, you will get these three lists, and you will get them with completely segregated with sectors and subsectors, so that you can start your stock selection journey, right? So you'll have to definitely do it manually. It takes some time, but the strategy is not rocket science, but stock selection is where you will have to spend some time, right? So now you've covered price delivery. Now I'm going to show you some schematics, I'm going to show you some more things, and then I'll tell you how you can use artificial intelligence to all these are in NSE. Absolutely, yes. We are partners of NSE. I'll show you NSE contract also. We take all the data and the tech platform that we have. We do all of that with NSE and SEBI. So now again, so order flow, liquidity, okay. So can you take a screenshot of this, everybody? This will help you. Take a screenshot of this. This is exactly what I explained. How many of you can recollect? This is exactly what we spoke about when I was explaining you the double bottom wala example that, you buy, you sell, all of that, right? So I've given you like multiple scenarios. So you just take a screenshot. I think this will help. Market structure is done. Now, how many of you will be able to identify why the stock moved up from here? Can I have a big yes in the chat? How many of you are able to understand why the hell did the stock move up from here, right? You've got a displacement here. I think everything else is fairly easy enough to understand, right? Next up, why this stock is moving up from here. You also, okay, so now would you want to take a screenshot of this? This is the first setup, right? So you can take a screenshot. This is the order block play. This is entry model 1. Take a screenshot of this, right? You can take a screenshot of this. This is entry model 1, where you have a red candle coming into the order block, and this is entry model 2, when you have a green candle coming into the order block. Have you taken the screenshots of both of these? Give me a yes if you've done it, right? So these two will, these two templates will, if you want, I can just go back here. Okay, Akshay, I will give you gold example. Gold में है बहुत सारे trades है. Gold का चाहिए, मैं gold का पूरा trade दिखाऊंगा आपको. Just give me 2 minutes. Okay, Akshay, right? This is done, and now this is market structure shift, and you can come back over here and do this. You can also see the order block over here. Market structure moves up, comes back down, and why the reason is what's the reason why the stock has moved primarily. So basically all of these things combined is what's going to give you all of this. Now we have created revolutionary technology, and that's where I'm going to be introducing you to StockWiz. So what does StockWiz do? So StockWiz helps you simplify your trading. So we help retail traders institutionalize their trading by leveraging technology, research, and advisory. So we have a membership where we trade live every single day with you. We have a tech platform which is powered by artificial intelligence, Gemini, Chat GPT, and we have partners with Bloomberg, and there are other companies like Refinitiv, where we constantly give you everything you need to know at a single place. So what do? We have a membership program which is combined of 4 or 5 major things. Number one is a full-fledged institutional trading course for people who want to become professional traders. So you have sessions like this, about 50 or 60 of them, where you learn every single step. And once you learn every single step in a logical way, we are executing them live in front of you every single day, not for 1 week, not for 1 month, not for 1 year, but for lifetime. Yes, I repeat, live trading for lifetime. The entire course access, which tells you, the course is divided into 4 levels. We teach you absolutely from scratch. We trade live in this fashion where whatever you are being taught, right, it doesn't make sense if it's not making money for you. So you're going to basically be executing it live like this. So you can see the volume dry up, which I just taught you. That's exactly how we executed live in the market, so that you can see how it works. And if you're not having the time to attend the live trading, you will have push notifications on the application which will constantly tell you which stocks are we buying, what are we doing as a SEBI registered research analyst. Along with that, you get Trader Intercom, Trades app, you get trade casting, you get a host of other features, and you get a free lifetime access to India's first AI powered one-click trading application. Meaning you can set your goals, your broker gets connected, and you will get introduced to Strike, which gives you free access. Like you get free access to Strike once you are a member of StockWiz. So what does Strike do? So with Strike, we are the pioneers of introducing one-click trading to Indians. So what have we done is we have incorporated AI and technology to introduce institutional trading ideas across different market conditions. And you will get all of that on your app. And with a single click, your entry, exit, stop loss, target, trailing, stop loss, position sizing, risk management, everything is done. This is retail trading revolution. So in this manner, you get your entry, the live price, the target price, your potential profit, your stop loss, your target, the status of that particular stock, the reason to take the trade, every single thing at your fingertips. This is truly revolutionary with an execution speed of less than 30 milliseconds. All you need to do is click on trade now and the order gets executed. We know people suck at risk management. So we have built an inbuilt risk manager which automatically calculates your position size, your risk, your trade, risk per trade, your potential profit, every single thing. This is the deal breaker. We have got AI powered news catalysts. I showed you Indigo's example. I showed you metals. I showed you other things. So we get news before everybody else. So all these other news channels that you see the news on, they are always laggy and delayed. We spend over about 40 lakh rupees just for subscriptions and to, companies like Reuters, Benzinga, Bloomberg, Hot Squawk. So all of these are big names which are only doing breaking news, which means that within microseconds of public announcements, you will get to listen to, get to hear all of these. And the best part is, in less than 3 or 4 lines, it will tell you which institution is buying which particular stock, why is the stock going to go up, why is the stock going to go down, in less than 3 lines. It makes your trading a lot more easy, and you know which stocks are buzzing. You have lightning fast trade executions. All trading types are supported. You get real-time market insights, which sectors, which subsectors are moving. You get real-time market insights. AI tells you which sectors are actually going to outperform, so you focus on those particular names. You have interactive dashboards, so every single thing, yes Hitesh, interactive dashboards where you see index and sector wise heat maps. You get the live news in one single click. So all of this for lifetime. So what do you get in the membership is, once you become a StockWiz member, we give you an institutional trading ecosystem where you get the course access in English and Hindi language for lifetime. You get the Discord community access, which I was showing you, for lifetime. You get access to SEBI registered signals, call outs, every single thing. You get access to the application for lifetime for a steal price of 14,490, inclusive of 18% GST. This is access to technology at the cheapest price possible on the face of planet Earth, because we are going to give you all of this for lifetime access once you become a member. only for 100 people every single month. It's an invite only membership. Once the seats are gone, you go into a waiting list. So what do you get? I'll repeat and I'll reiterate. This is for people who want to leverage technology, a SEBI registered research analyst, for them to tell them where to buy, where to sell, how exactly trading is done from an institutional angle, because we believe in results. Just teaching you a particular strategy doesn't make the end goal completed unless and until you've made money from it. So we are a very performance oriented, a very result oriented company, where we're using and leveraging technology, artificial intelligence, and research of our analysts to not only let you know where to trade, how institutions trade, but also to help you execute in one single click. This is a one time charge, no execution fees, no recurring charges, no upsells, nothing. This is a one time fee. And that's the reason I know it's going to get sold out in minutes, because what you're getting is an investment in 5 crores, of investment of 5 crores that we are doing every single year on technology. You get that free for lifetime. So the whole objective of creating all of this is, we knew just by courses or workshops or strategies, retail traders are not going to get upgraded. They need access to technology. So we get data from NSE, we churn that data, we know every single thing. We have different vendors. So we deal with over 12 international organizations. And that's how we've created this one application where you just have to click a press one click, and all of this gets executed. And the biggest thing is not even out. Post November, we're executing and introducing fully automated trading. That means you show your face ID for that particular day, and all the trades based on the strategies chosen, all the trades will automatically be executed. You don't even need to press that one button. So again, that's the acceleration in technology that we are trying to build to the bring to the table. Now, what exactly does StockWiz do, and how is StockWiz different? So let me tell you. So this is our website. So I'll just show you how StockWiz is really revolutionizing and disrupting the entire market. So as I said, right, we help you trade like institutions every single day. And you have to understand, right, a retail trader like you cannot scan 3,000 stocks a day. We have a team of 15 research analysts and a team of 75 people who enables our clients to have this seamless experience every day. So we have the team, we have the infrastructure, we have the research, we have the technology, we have the data. So what we do is, we are a facilitator, and we try to create an ecosystem for those kind of people who want to be in the top 1% of the trading game. We're not the ones who are going to say, hey, please go trade Nifty, go trade Bank Nifty, all of that stuff. No, we care about our clients making money. And as a SEBI and a national stock exchange registered company, we are trying to give you the best in the game. Now, you've already seen the Discord, you've seen how live trading works. So you can see a snapshot of how live trading is done. We help you trade like the institutions. As I said, you will get world-class trading education for the people who want to independently trade and learn. You'll go know the buy zones, you will get alerts about the institutions accumulating, you will see setups being triggered, you will see orders being filled. You will also get real-time trading signals. You're going to be trading with 12,000 people live. So these are 12,000 top 1% of all Indian traders who are trading the large capital, are institutional, professional in nature. That's something that we are disrupting. So you're going to get all these real-time trading signals. I showed you the Indigo trade recently. This is just a visualization of how that's actually getting executed, and all members are taking advantage of that. This is the live trading stream that happens every single day, where you can ask your questions, raise your hands, post your charts. You basically have a research analyst for lifetime with you, and who's again specialized in institutional trading. Vipul Kumar is having an error, so StockWiz team can kindly reach out to him. Yeah, once the payment link, it'll show you automatically seats are sold out once they are gone, right? And the 14,490 pricing, okay, I forgot to tell you, 14,490 pricing is only for the first 100 seats. After that, it goes up to 19,999, inclusive of 18% GST for lifetime, which is a regular price. You also get the opportunity to collaborate and network with India's top traders, which is again crazy and insane, right? So this is what exactly you get. This is the you can join the entire ecosystem. Now, one very interesting thing that you'll know is the power of the community, right? So I'll just show you that how exactly you can leverage the power of this community, right? So let's check this and let's get going. So we have people from all over India, and these are also we have people all across the world who are parts of big organizations, big investment banks, and you get a network of over 12,000 people now who are doing the same thing, having the same mindset, and they're trying to compound their wealth. That's exactly what we are trying to do. This is India's largest trading community, built for traders and built by traders. This is the lifetime pricing, and you're getting a much discounted price at the moment. Now let me give you a teaser of what exactly happens in the application, so that you kind of get a better idea. So I'm going to take you to YouTube, and I'm just going to go and check, help you understand the app teaser. So I'm just sharing my screen now. Have a look at this and enjoy. So this is basically the Strike application, and this is how the interface looks like. So you can connect our partner brokers in one single click, which are one of the fastest brokers in the country. You click, the balance automatically gets fetched. You will get lightning fast trading signals from SEBI registered experts in all the segments. Right now, we only focus on cash segment, and then maybe futures and options. You can set your trading capital, set your risk. AI assisted order execution will automatically set your stop loss target, your risk, your trailing stop losses, everything. All you need to do is authorize once, and every single thing is done. It'll calculate your potential profit. You'll see your margin available. All you need to do is the swipe. For all of you who are saying my registration is done, you will see your name coming in on the chat right now. Okay, so you will see that your name will start coming in, and now you can track all your active and closed positions like this. This is technology at its best. Like, we are trying to facilitate every single thing so that you on the go can manage your position, take advantage of institutional grade trading ideas. So whatever my 10 team of research analysts are doing every single day, you get that research at your fingertips, and that makes you good returns, and that makes you good money. Now I'll also show you the prototype of the app, so that you kind of understand. The app is already live, but if you download it from Play Store or App Store, you will you will see it being locked, because it is members only. It's a private application, because we are only creating this tech for our users, right? So let me showcase on how this really works. So let me just go back here and show you how exactly the app works, right? So let me go to the homepage once, and let me show you how exactly this works, and you'll be able to get understanding. So I'll just present this to you. Okay, there you go. So now you can see, you can just click here, connect your broker. Once the broker is connected, you can select trading or investing. You can have your own preference. I'll just make it full screen. You can have your own preference. Once you will have your top performing trading ideas. You'll have news over here. You can see your portfolio tab, which positions are doing what. Once you click on those particular positions, it will calculate your return on capital, your return on investment, your risk, your reward. You can look at the charts directly from TradingView over here. That's again one more thing. Apart from that, you will also have the market section coming in, where you will see all of this data, heat maps, which stocks are bearish, which ones are bullish. You'll see the sector watch. Apart from that, as I said, right, once you get a trading signal, what exactly happens? Once you get a trading signal, so I'll just click on trade now. The app will pre-fill every single thing. You can adjust your trading capital. You can adjust your per trade risk. The app automatically calculates your potential profit. This is just revolutionary. So that's what we're able to do. That's what we are able to generate. And you can also do your own risk profiling. So you can tell the application what kind of trades do you want to take, what kind of risk appetite do you have. So all of that can also be done within the application. So that's basically something that again separates us from others. You will be able to see different indices. So all of that stuff is done taking in consideration what users want. So that's again something that separates us from others. Now apart from that, as I said, right, transparency is something that we are so proud of. So you can literally go to our website, click on about us, and just see what our office space looks like. Who are our employees? What are we disrupting? As I said, we are a tech first platform who are trying to disrupt the way retail traders trade. Trust me, the order block and the VCP strategy that I showed you today, people will charge you 15,000 rupees primarily just for the strategy. How many of you would agree for that? You can honestly agree, right? Again, we are trying to disrupt. People would literally not share the strategy, talk behind the bushes. And what we have told you is in itself so valuable. You can start making money from it from tomorrow if you follow the system. StockWiz membership is for those who want to take that extra leap, people who want professional assistance, people who want access to technology. StockWiz is for them. For people who want to independently do it, you can definitely go ahead and do it just based on whatever I've shared with you. I've given you the schematics, I've given you a lot of that stuff, right? The application will have a web version post November, not right now. It's app only right now, but all the other things are web, like the academy, everything is web also, right? You can see the entire team over here. So again, everything is like very, very transparent. You can see our partners very transparently written over here. So every single thing is like mentioned, in front. Everyone can see whatever we are trying to achieve and whatever facilities and features we are giving to our members. Along with that, I will also be showing you one very interesting thing that lands me up on my Discord, right? So again, the profit and loss of the members I've already shown you. So look at this, right? This is one trader joined in February, right? So 2 months this person took patiently to understand how the strategy works, and then look at the numbers. So the training, the course materials are live and pre-recorded. So I'll tell you how that works. Thank you so much for reminding me. So basically, I'll tell you how this works, right? So you have every weekend, you have live classes in English and Hindi both. So you get to choose which one do you want, and you have lifetime access. So it never really expires, right? So what happens is you basically get access to institutional grade professional education. You get a mix of recorded and live videos. So you have to watch a few recorded course videos, and then the live video starts where the application of the strategy happens. If you want to see how the roadmap looks like, I'll show that also to you. So you get all of these features. You learn smart money concepts, volume, candlesticks, order flow, options, futures, stock selection in English and Hindi both. You have recorded and live both options. You have these partners. This is the course curriculum. So you will see that there's level 1, level 2. This is the smart money concepts. Level 3, futures and options, and level 4 is trading, psychology and winning mindset, right? So you get access to this entire system, checklist, scanners, AI tools, every single thing you get. And this is your roadmap. So since all of you are going to be VIP members, you will be assigned a dedicated relationship manager first in the industry, where we assign one dedicated relationship manager just for you. So as soon as you sign up, you will get a WhatsApp message. After that, within the next 48 to 72 hours, your relationship managers will reach out to you. They'll give you a call. They'll do your onboarding. They will help you set up every single thing, whether it's your broker, whether it's the application, how much you want to risk, what exactly, how do you start, etc. No prescribed capital requirements, Mr. Amit Agarwal, but we usually recommend anything more than 30-40,000 is good enough, right? So that's where your registration onboarding starts. This is, and then, your program starts, you start learning everything, and then you start learning and applying the strategies, and then you take about 25 to 30 days to get acclimatized with every single thing. So that's exactly how this thing works. Apart from that, as I mentioned, I will also be showing you how your roadmap really works. So I'll go to Discord and I'll show you how things work. So again, as I said, right, we are very performance oriented. As I said, every single member who you will see over here will 90K capital making 10,000, which is close to 11-12%. So that's really, really good. And people who start, they are first taking some time to get adjustments, right? They do their adjustments. And see, for example, I'll show you, this is an options trader, very recently joined the this thing, and now he has completely changed. So this is what a options trader ka PNL looks like. Brokerage charges, and the overall PNL is this much, and the net PNL is like. So again, people who trade primarily, if they trade options, this is what happens. People who trade equity, this is what happens to them. And that's why we are always we're always telling people to shift to equity, trade equity. This is 7 lakh rupees capital, decent returns on that. You'll see this one also, losses are small, winners are big, and this is quite consistent across the board, right? So if you see this, you'll always see consistency in the PNL of any trader who you see. Risk management is the key. So again, if you want that right mindset, and if you want to be in the club of people who are trying to compound their money slowly and steadily, that is StockWiz is probably the place for you, and you will almost see almost everyone from loss making to profit. So StockWiz is known for turning people from loss making traders to profitable traders, and we take a lot of pride in that, right? So so this guy is also saying, right, that I was losing money constantly until I joined StockWiz and I got the first profitable month. So again, the results kind of say it all. Members are able to find out their own trading ideas. There is nothing better than this. So I think that's something that again separates us from others. Now, as I said, right, I will show you what the roadmap looks like. So I'm just going to click on English, and I'm just going to open up the roadmap in front of you so that you know what you are signing up for, what exactly happens when you when and how your course starts, right? Now you see that every module has a set of prerequisite videos. You have your live session slots, and then you can pick up your live session slots. You can attend as many of them, and then you can keep watching the videos and you can keep attending the classes. And this is like a complete full roadmap that you have. Now there are okay, so I'll just update you on the number of seats which are left. So I think we've got about 44, 45 seats left. Yeah, I think this is delayed. Okay, so StockWiz team is telling me there are 14 seats left. I think this is moving a little slower and it's not updated, but that's the thing that I can tell you. Now, some people are asking me, I'm a working professional. How do I, operate this? So it's very simple. The entire technology part reduces the time spent by you, and that's the entire point of the entire model, right? So 70% of our users are working professionals, right? And I'll show you the number of users that we have. We have about 12,000 users, paid users, who are lifetime members, and all they do is they watch the videos on the weekends when they have times to enhance their knowledge, and they take the research and recommendations that we are providing on an everyday basis. So do I directly pay on the mobile app instead of link? Is it okay, Hiren? If you want, you can do that. You can just directly go to the app and then just buy it directly from there. That also works. But you can just just because you are from the webinar, you can just use the same link. It's the same thing. Yes, Dinesh, you will get it. You can just request it with the team, and the team will process that for you. How are you able to offer all of this at such a low price? So, see, as I said, right, we are a tech company trying to democratize institutional trading for everybody, and we believe that if it is not accessible to everybody, it will not make any sense. So again, there are a lot of costs associated. We have over 80 people working on the entire ecosystem. So again, there are costs associated, and hence don't ask it for free, because you don't really there's no free lunch, right? Let's be honest. And the services that you're getting for lifetime, it's just a no brainer, because we have built it in such a way that this is something that every trader deserves. Because I've been a trader for the last 10 years, so I know where education falls out, I know where live trading falls out, I know where technology is needed. I know if a working professional is there, they don't have time to execute the trade, they don't even have the time to look at the market, they don't even have the time to learn anything, but they want to compound their money because they have access to capital. So there has to be technology that leverages something, right? So if there is a research analyst who has spent 10, 12 years of their life, there should be a way for others to leverage that knowledge, that experience, and help them compound their money. That is why technology is there, right? Someone created a phone and everyone is able to leverage that, right? People are creating businesses on their phone. So that's how technology is going to come out. With respect to broking and retail trading, it has not happened, but that is what we're trying to do. Absolutely, yes. You will get the watch list. Absolutely, yes. You will get the watch list for all the stocks using relative. So, Prabal, what we do is relative rotational graphs are good, but they still don't show you subsector level data, right? So, what we do is we also have subsector level data. Again, it is not live on the app right now, but on Discord, we constantly share it with our clients. And around Diwali, the RRGs will be live in our app also. So, you will be able to see which sectors are doing well, money flow is scaling out or getting in, getting out from where. Do we need to open? So there is a StockWiz X Dhan account that you will need to open to start using the application and to use all the benefits. Don't worry, the team members will guide you based on that. Absolutely, yes. Okay, next question is do you get app access only? So as I said, right, we don't only give app access, because Discord is where all the community support, live trading, all of that happens. So again, for the full experience, you'll have to, okay, one example for gold you wanted. Okay, So sorry. I'll just show you gold ka example. I'm so sorry I missed it. So what I'll do is, okay, so this is one more thing which separates us from others. So someone is just saying ki gold mein kuch dikha do, right? So what you can do is just write the name of the channel, and you can literally go and select any date. So let's say I am going back to the same date of the last year, and I will just check what is happening. So I'll just click on jump, and you will see it's actually a gold trade that I am playing out, and this is the gold position. So you can see that particular position, what trades I am taking, and what is the result of those trades, so that you can also understand that 1 year back also we were using the same system. For example, this is Vishnu Prakash Pungalia, some stock. Now, how many of you are able to identify the volume dry up? How many of you are able to identify the displacement? How many of you are able to identify the first pullback? Please give me a yes. For those of you who have seriously attended the webinar, please tell me, are you able to identify the setup here? So I can see a lot of yes over here. So now this is 1 year back, right? What happens to Vishnu Prakash Pungalia after we take the entry? Let's just scroll down and see. This is what happens to Vishnu Prakash Pungalia in the next, I think, 15-20 minutes. And then this is what happens towards the end of the day. This is the gold trade. So I'll try to show you how that works. But this is again Zomato, VPRPL. This is Zomato's trade. This is 1:3 risk reward ratio. So again, you can look at this Vijaya Diagnostics. Now, how many of you are able to again spot this? Can I have a quick yes? Vijaya Diagnostics, very, very simple structure. This is a displacement. This is your volume dry up. So we just went long on Vijaya Diagnostics. And after a few moments, this is what we see in Vijaya Diagnostics, right? You can see it very clearly. And this is what happens in Vijaya. So now, again, this level of transparency, I don't really see anyone giving you in the entire world. If there's a stop loss, it's a stop loss. That's okay, right? But if it's a winning trade, it's a winning trade. This is gold, this is silver, and again, they are all traded based on the same methodologies, right? So again, what I'm trying to tell you is that you can Discord access, Prabhav, is in the membership, right? You will get the access. So you can literally go and search for any stock. So let's say if you want to see, okay, Tata Motors, or let's say Tata में क्या क्या लिया है, right? So you can just go to Sniper Equities, search Tata. So whatever Tata Group stock trades are there, you will see all of them, and you can just keep scrolling down, right? So I just have Tata Power, I have this, Tata that, Tata Elixir, blah blah blah. So all of that is there, right? So again, that's something that separates us. Now, apart from that, you've got like a full study resources section, which will give you schematics of everything. You will see how to analyze OI. You will see all the schematics. You will see all the trading models that we have. You will see different schematics for internal and external. Yes, there is live doubt session every week. That's what we do. Some of the strategies we covered today, like two of the my most favorite ones. Then you will see how to do your charting, how to do your executions. You will also be able to see how what are the different situations in which you have to act. You get documented measures like this. The how do you, it's like it's a very systematic way to look at things. You'll get stepwise order execution metrics, how price delivery works, how to create your trading idea, how to identify your point of interest. You will see all of these mind maps. So every single thing is done in a very systematic way, so you get access to all of this as well. You also get our customized full trading view watch lists also. You get so there is also an inbuilt regular news feed channel which will give you business updates. It will give you what is happening in different stocks, which is linked with CNBC. Rashik, don't worry if your payment got debited and there is a issue. Don't worry, just send your name to me on the chat, and I will sign up instructions. So once you've purchased, in the next 15 to 20 minutes, once the webinar is over, you will receive all your onboarding instructions on WhatsApp, and by tomorrow or day after, you will get a call from our team as well on how to complete your onboarding. So you will get all of that, right? Apart from that, as I said, right, 11,768 members, and you can almost look at anything. If you want investing related thing, if you want stock research specific things, so we have a lot of things going on over here, so that also kind of helps you out. So all of this is really, really needed for someone. So the last 6 seats is what we have, I think. And again, this is delayed. Maybe we'll have the last 3 or 4. How to get your stock list? So as I said, right, I'm going to give you the stock list. Absolutely, yes. So I'm going to share that with you. And perfect. Do we need to open? No. So Amit, as I said, right, we're going to be launching Zerodha up stocks and grow post November. But until then, Dhan X StockWiz, there's a account where you get a lot of benefits and no algo charges are there. Like it's all complimentary for you. Other brokers usually charge some 2,000 rupees or 4,000 rupees. You don't even have to pay that. Confirmation will be received. Which broker it's done. We will give you a special link so that you get all the benefits that are associated with us. Application will automatically take buy and book profile on the target SL. So as I said, RK, you will have to authorize the application. One click you will have to do. Post November, you don't even have to do that one click, right? So right now you'll have to do that one click, authorize the application. Trade management will be done by the application itself. The trade idea will be given by the application. The app will do the position sizing, but your authorization is needed as per SEBI rules. Okay, Mr. RK, I hope you're understanding this, right? Yes, Manav. Even if you have it, the order will on which time frame to be checked, sir. 1 hour time frame, 1 day time frame for swing trades, 1 hour time frame if you are looking for. Right now, we only have it with Done because they are offering everything that we need. Other brokers will charge the customer, which is you, 3 or 4,000 rupees a month for API related trades. So Sunita, don't worry. When you sign up, you will get introduced to all of this, and you can keep that other account separate, and all the trades that you've taken via StockWiz can happen in one account. So you have statistics, clear cut statistics on how much returns you've actually made. All trades get automated execution. As I said, it's one click automated execution. The first click has to be done by you, then the app automates it for you. Post Diwali, which is first week of November, you will get automated executions. That means you don't even have to do anything, just authorize it once a day. Authorize with your Face ID, fingerprint, or your PIN once a day, right? If you have paid, the membership will get activated. It takes 60 to 90 minutes. Trade session, the app will be on order block. So it will be on order block. It will be on the contraction setup. It will be based on multiple other setups that we use. So I'll tell you basically, if you want to see how it works, I'll just show it to you. Okay. So I'll just go to Sniper Equity. Right. So again, we keep updating the application also in multiple. So this is our 24th version in the last 24 days. I need EMI with SBI net banking. Okay, the team will get back to you. You can drop your number. Premium access of TradingView is provided with the broker account that we ask you to open. So it's basically, you multiple features you get. So for example, I'll tell you how the trade idea is shared with you on the application, how it works. Oh my God, I didn't tell you. So the month of June, we cumulatively all the trade ideas that we generated, we made about 23%. Month of July, 18%. And month of August, 19%. Now, don't think you're going to make 19-20% a month. Yes, some months you may be able to make it. Usually 12 to 15% is what you should be aiming to make, right? So that should be your expectation from the market. Now, whenever a trade idea is given, it is given. I'll first show you how it is given, and then I'll show you how the update is visible, right? So push notifications are coming to you every day. This is how a trade idea is given. Let's say I'm giving a trade idea in CAMS. 12% in a month. Yeah. So that's see, we can't really guarantee any returns as per SEBI rules. And we're not even going to guarantee, because no one can guarantee something in the markets. But what I can say, the strategy has been historically delivering this. And if we're able to follow the rules, this is the kind of returns that you can expect. Sanjay, you will get the link to open the account while your onboarding is going to happen, right? So जैसे आपका onboarding हो रहा होगा, right? You will get all the links required, etc. Right? So don't worry about that. All right. So I will just showcase that to you. Just give me a minute, right? Just allow me a minute. Yep. So I was showing you this, right? So this is your entry target. So whenever the stock is in the buying range, it will show you it's in the buying range and you can execute your trades. And once you have taken a particular trade, for example, let's say you've executed this particular trade. So what's going to happen is the application will show you something like this, right? So you will basically see what's the live status of your trade. If you already have an account, not a problem. We will get it linked. There's a process for that. The team will inform you. So you will see that the current trade is in profit. this is your life status, that's your target, etc. So that's how it has happened in the last, I think, 2 3 days. The win rate dropped. Yes, you're right, because the markets fell. I told you, right, in the month of October, 2 3 days. But you can't really judge 2 3 days with 300 days data, right? So 300 days data, it's like crazy level of returns. So again, what I'm saying is, you have to stick to the system. This is for professionals. You have to understand that this is not like आज पैसा दे दो डबल करके दे देंगे, वो वाला कुछ सिस्टम नहीं है. यहाँ पर आपको सिस्टम के हिसाब से चलना पड़ेगा. You will have to do everything that we are asking you to do, with proper risk management, position sizing. And I'll just tell you very honestly, right? There are periods where you will get negative returns. There are periods where you will get negative returns, and there are periods where your returns will be flat. But when the returns actually come, they will come and do wonders for you. How many of you are understanding how this works? You have to understand that realistic trading looks like this. You will make money, you will lose money. At the end of the month, you have to ensure that your winners are much bigger and much greater. Yes, Simar Chabra, I will give you the watch list. It will come via a WhatsApp broadcast to you. Absolutely, yes. Yes, Sunita, you can change your number later on. Not a problem at all, right? So that's exactly how it works. Like, this is how the AI thing works, right? So Indian Oil Corporation, Morgan Stanley is overweight on this. You get to know this. You'll get to know what other investment banks are doing. So all of this information, all of this data is important. You get watch list like this also. Shaju, you will get it as a WhatsApp broadcast. This can be used by NRIs. Yes, Nara Dhan has started onboarding NRIs, so you can create an NRI account. Mr. RK, yes, if you want to speak, yes, you absolutely can, sir. What you can do is just okay. So you can email me on this email, and we can then connect. All right. So I'll just give you an email. Otherwise, StockWiz, the team will give you HUF account. I'm not sure, that you'll have to check. Yes, Tesla Viru, you can do that. You can use your wife's account, not a problem. Right. So again, that is there. And as I said, right, I'll just keep scrolling up and I'll show you the good, bad. Like, I'll show you where there were losses, if any. I've transparently just been scrolling up. If it's a stop loss, it's a stop loss. See, I'm not afraid of stop losses, or neither am I afraid of showing any stop losses, because I know if I am being realistic, I have to tell this to you, right? And anyone who feels, stop loss execute ho gaya, to, oh my god, oh, this is a loss, etc., doesn't really work like this, right? So for example, look at India Mart. If you want to look at this, right? So this is your volume dry up. This is where the stock was setting up. We alerted everybody, go long on India Mart. And then this is the 1:49 p.m. live execution, and then India Mart just spikes up next day by about 3%. Right, last week I paid, but no one contacted me. Can someone please respond? Mr. Jay. Okay, Mr. Jay, can you just drop a message on this number, a WhatsApp message on this number stating the same, and the team will get, you will get daily recommendations. Absolutely, yes, you will get daily recommendations. And for example, just look at Ashok Leyland, right? Just look at the volume dry up. I hope all of you are able to identify this crazy volume dry up. This is like our bread and butter setup. We wait for it. We alerted everybody, go long. We take advantage of this candle. We take advantage of the move. See, majority of our trades are swing trades, less positional, but swing trades are a lot. We also have intraday trades, and options is not something that we focus on a lot. Yes, when there are good quality setups, we focus on options. But as I said, my main objective is to help my clients generate consistent returns, right? So that's exactly what we focus on. That's how you get your alerts. That's how this works. So again, that's really important. And I will also show you one interesting thing. This is the month of July. And when markets fall like this, stop losses like this also get triggered. Average holding period is 3 days. Tanvi Bajaj. Like, you buy it today, sell it after 3 4 days. That's the average holding period, right? So that's basically how it works. You will see verified PNL like every, whatever date we are sharing the verified PNL. You will see that. You will see, the exact precise entry, exit, stop loss, etc. So all of this, and the most important thing is, once you are a lifetime member, you are getting basically almost everything, and all future technological upgrades that we are getting, you're going to get that also. And one thing that kind of separates us from everybody is the way, the kind of collaboration and the kind of entire setup that we have done. So for example, have a look at this, right? Asian Paints We knew that the prices are increased. We took a position in Asian Paints. You can look at this, right? So Asian Paints, we look at took a position here, and within 15 minutes the news came and the stock moved higher, right? So again, if you have the right information at the right time, you will always do good stuff, and that is exactly what we were able to do. Now, for everyone who's facing a problem that I was not able to book, my payment got rejected, or this happened and that happened, you can pre-book your seat for 999, and you can pay the remaining balance in the next 7 days. So that is something that you can do if you have a payment issue, or if you want to get onboarded, etc. You can do that. 999 rupees you can pay. The remaining balance you can pay in the next 7 days, right? So that's something I can do for people who are saying I do not have access, or my payment is not going through. And for people who want to individually trade also, see, I have taught this to you. Your job is to find this in the live market, right? If you want our assistance, you can join us. But if you want to do it yourself, Orissa Mineral Development Corporation, we identify, we tell people next day stock up 6%, 13%. This is what you basically have. Do we need to follow Discord all day? No, Pavan, you don't have to follow Discord all day. As when you'll have the application, you will get trading alerts on the app also, and you only have to follow specific channels on Discord. And as I said, post Diwali, we are getting full automation. That means you don't even have to look at the Discord, or you don't even have to look at the app. But right now, since your authorization is required, you will have to at least authorize that, okay, you can take the trade, because we can't take any trades weekly or chart. See, the strategy works beautifully on the weekly time frame. Monthly is too long of a time frame. So again, it works on monthly also, but like monthly, for a trade perspective, monthly is like a very big time frame, to be very honest. Amal, Arunesh, if you've made the payment, your name will be visible. Otherwise, if you have got a green tick from Razorpay, that means your payment is complete, right? So now I'm just constantly scrolling up. I'm just trying to show you what all happens, over here. We also release a YouTube video every day to tell you what stocks we feel are going to explode. That's something that's free of cost that we do for everybody. You can just watch those videos and understand what kind of research do we put in. We transparently share all the data, and I'm just constantly scrolling up, and you're only seeing what we have shared. This is the NSC contract that we have. So we have the entire application data is taken up from NSE, and we try to do everything possible in our capacity. Will account be active after paying 999? No, 999 is just a seat reservation price. Once your seats are reserved, then once your seat is reserved, essentially you will get a call from your relationship manager. They will tell you how things work, and then you can proceed with that, right? So this pre-booking seat which is there, you can just pre-book for 999 rupees, and you can reserve your spot, so that the 14,490 price is reserved for you. And all right, everybody. So, for all of you who have booked, welcome to StockWiz. I welcome all of you with open arms, and I wish that we have a very big impact on your trading. RK, you can just pay 999. Your counselor will connect with you. Alternatively, just drop me an email on parang@stockwiz.in. We can have a connect, right? So that is something that I can do. So, all right. So this is the ebook which I really like, which fixes your discipline risk management. Can we use the app on laptop? Mr. Badri Narayanan, from November onwards, you will have the web version. Right now, it's app only. Discord you can use on your laptop. The learning app you can use on your laptop, but the execution app is currently on this thing. But the broker application is there on the web, so you can do that. All right, you can follow me on Instagram. I'm not really active a lot on social media because I just focus on my trading, but you can follow me on social media. I'll just show you my Instagram handle, so you can probably say bump in and say a hi. This is my Instagram handle, so you can follow me. This is my Instagram handle, so you can do that. This is my YouTube channel. You can check out the videos that I post, and you will see what exactly is my style, right? Can I trade daily before completing the course? Mr. Srinivas, there is instructions that you'll have to follow. You'll have to follow risk management really, really nicely. And within joining, like within the first 7 to 8 days, you will get comfortable in taking your trades. So don't worry about that. All right. Perfect. So I think everything is more or less done. Thank you so much, everybody, whoever has signed up. I welcome all of you once again to this, and I hope that the 3 hours that we spent has changed the way you perceive trading and has impacted you positively. So thank you so much for tuning in. Namaste. Bye bye. Take care.